Okay, now am I audible?
Yes, you are audible.
Good. So, good morning to everyone. A warm welcome to all participants. Myself, Hemant Mehta, ThinkTank chapter leader, welcomes you all to ThinkTank webinar, Technology, Banking and Mutual Fund. Today we have ThinkTank webinar for all stakeholders in finance, corporate affairs, industry and professions. ThinkTank has been in existence since over decades. Ideas for forming this think tank was conceived on 6 January to have conferences conclave with CEO, CXO, CFO, panelists, and specialists sharing experiences and real life examples. All panelists are finance leaders working in reputed companies or professions since many years and have deep domain knowledge. Think Tank platform now digital has got overwhelming response globally on digital medium and expanding rapidly through LinkedIn, Facebook, etc. Our participants and experts have rich experience in industry and professions who have done CA, CPA, ICWA, IIM, CFA, CMA, ISA, DISA, IFRS, BTech, Masters, PhD, etc. Sharing experiences, knowledge, wisdom in India, spreading globally currently since over a decade as a reach outlet initiative globally. Our website, you can just check in our website, www.thinktanks.com. And with this, we are sharing all the knowledge in spite of limited resources. As a participant, we are aware today, we have launched a weighted kind of a newspaper, approximately titled as Think Tank at the Vivek Patra India Growth Story. A comprehensive conferences material compilation over 500 pages sharing experiences by CEO, CXO, CFO, specialist with latest development and series in blocking. Regulatory frauds, finance reporting, there are certain additional subjects like regulatory frauds, financial reporting, Ind AS, IBC, taxation, digital capital markets, technical analysis, bank, corporate affairs, etc. would be available for subscription. And any ethical contribution by well-wishers are welcome. We will be covering important and latest development as suggested by many participants in coming weeks. We request all to subscribe to Think Tank YouTube channel for watching summits, conclaves, webinars, and join, connect, and network in Think Tank webinar groups in LinkedIn and Facebook pages specially created for suggestions of many participants and panelists. We once again welcome all the members and panelists. Friends, we have some, story today with Mr. M. Narendran, Mr. Mitesh, Parekh, Sandeep Bhat, and other specialists in the field, other speakers like Sandeep Bhat, etc., to share their knowledge and wisdom. These few words, let us just discuss some development in IBC, as I have been told to share some development. In IBC, there is a new concept we have discussed last time also. The concept is pre-pack. Pre-pack has already been announced in last week, and all the acts has been already now it is in place. Regulation which are pertaining to pre-pack has been released yesterday itself only. So we will be having a full-time seminar on pre-packs, which is specially made for MSME. And with this, we have our other speaker today. So I request Mr. Aditya to carry it forward. It seems that Aditya is, I think, is not connected. So
Hello.
I request Mr. Bhat to directly start his presentation on government MOF released data and IPOs. Mr. Sandeep Bhat, please.
Yeah, hi, good morning, and welcome to all the participants. Mr. Narendra, you wanted to talk about something?
No, whether I think I will be later than you, then I can do, no problem.
Yeah, okay. Welcome, and the first thing which comes to mind with the prevailing situation in India, in fact, more so in Maharashtra, the COVID-19 and the relevant situations across the world as well. But to come to the point on our ideals, first of all, the think tank Vivek Patra was launched, and the specific thing where we want to actually focus on is governance, and be truthful in all aspects where the presentations are made. There is no ambiguity. So we look forward to all the presenters to stick to these ideals. Uh, this is my disclaimer as I go forward. And to come to one more very important aspect of the COVID situation, the Ministry of Finance actually came out with this notification where they have suggested that all bankers also be called as COVID warriors. And our salute to them for having worked throughout the pandemic without any disruption. The RBI for the manner in which the clearance of checks and the online banking systems have evolved and worked. So we actually salute them and request the participants to observe a 2-minute silence, so that those who have lost their lives in the cause of this problem, um, we actually uh, give them the benefit of our support. Yeah. Thank you very much. And in addition to the bankers, I would, also have appreciation for all the financial intermediaries, as we call them, and all the participants of the financial markets. Not only the bankers, because even the stock exchanges were open. All the forex and other, brokers and other things were open, and they could actually work towards seeing India's actually growth story not be stalled. We go to the next section, and this is the IBC ordinance which we were talking about. In fact, what has come in there is relevant for the situation on hand. More importantly, mentioning that even the MSMEs can now go to the NCLT, um, and there's a legal framework on how to go about it. Uh, if
Sandeep ji, we lost your voice.
no, I've stopped.
Okay.
I've stopped. I was just actually trying to uh,
Fine.
see whether I can actually put that across. This is the IBC, gazette notification which had come on the 4th of April, where it is specifically mentioned that the small and medium enterprises and how to go about, taking them through the process of the IBC. They can also get, succor, actually, I would say, to see that their pains are, minimized. So this is what has come in terms of the issue on IBC. I'll go to the next part of the presentation.
Can you zoom it, please?
Yeah, I'll go live on that again.
If you can, if you can't open it, should I just summarize the thing?
Yeah, okay, no problem at all. I had opened
Yeah.
it. I don't know whether you actually were able to see
We
it.
can't see on the screen. We can't open.
Okay, I'll open it, and
The basic
I
thing
did not want to actually. Can you see it now?
Yeah.
Okay, so what it actually says is, and whereas it is considered expedient to provide an efficient alternative insolvency resolution process for corporate persons classified as micro, small, and medium enterprises under the Insolvency and Bankruptcy Code 2016, ensuring quicker, cost-effective, and value-maximizing outcomes for all the stakeholders in a manner which is least disruptive to the continuity of their businesses, which preserves jobs. So what we are really afraid of is the job losses and the impact of COVID on the MSMEs. So the process actually, as Mr. Hemant said, we could actually have a session on this over the full course of a session dedicated to this part of the IBC section. I will resume my sharing in terms of in terms of what I was showing you.
Yeah. Sandeep ji, anything else you want to continue with?
Yes. In fact, I'm not able to open the page. That's the whole. I will have to stop sharing and come back again.
Yeah, try again.
No, I think I will have to log off and log on again. So if Mr. Narendra, you want to talk about anything on this?
and after that.
Has been muted. You are hearing?
Yeah,
Yeah.
yeah.
Acha, my video also on?
Yes.
Okay, okay. This is there were a separate committee appointed by the IBB Insolvency Bankruptcy Board, headed by MS Sahu. And there are quite a lot of law firms and specialists on that committee. And they worked on this pre-pack for what you call for all categories as an alternative to the insolvency or CIRP proceedings. And their recommendation in line with the internationally such available pre-pack that has been given and submitted to the IBB and government and the Ministry of Corporate Affairs, and they were examining that, and that as promised in the budget by Finance Minister, that the separate act for MSME was in the offing, and accordingly they thought that in the first instance this pre-pack arrangement, let us start with the MSME, and accordingly this audience has been passed. Here you know that earlier for insolvency proceedings of CRPRP, the limit has been enhanced from 1 lakh to 1 crore. Now there were mentioning that it may not be what you call usable to the MSME, and they may be totally taken away from the this particular benefit of CRP. That is where that now from 10 lakhs to 1 crore in the MSME category, this pre-pack arrangement has been given. And here another important thing in the other insolvency proceedings, the debtors is not in possession, it is in creditors in control. So the through the insolvency professional, the moment it has been admitted, they will take control of the company, and they will run it on a ongoing basis, or means going concern basis, and the debtor will not have any say on that. The entire management, all that, in the sense the board level make change, ownership will change. Whereas in this MSME, it is the corporate debtor or the MSME promoter himself is moving the resolution for his account, and he will be submitting his resolution plan to the what you call your creditors, that is secured creditors, and the secured creditors, after examining all that, and with the around 66% and 75% that majority, then they will get it submitted to the NCLT through the insolvency professional, and the insolvency NCLT also will have to give their permission within 30 days. So overall, I think within 90 days plus 30 days, around 120 days may be the case, where against the other insolvency proceedings where it was supposed to be lesser period than 270 days, then went to 330 days, and whereas the cases are pending, some of them even beyond 430 days or even more than that. So here it is expected that MSME, which have been getting in the problem for quite a long time, and the Reserve Bank has given 2 times restructuring even in the COVID period for COVID related assets, as well as they are in the second wave of COVID are likely to get affected. It is now expected that they can get a resolution, and as rightly mentioned by earlier speaker, that the MSME promoter has a more knowledge of his company, of his product, his all that efficiency. So here there is the change of management or change of promoter is not important. Once the resolution is approved, so it is the debtor himself is bidding for that, and he will again run it on the resolution plan, and there will not be loss of employment also, and the intrinsic value of the MSME can be preserved, as they are the contributor to GDP as well as exports. So this is in turn one of the important measures, and when we experience better and better results under that, I am sure the ministry as well as that IBBI will be making available this mechanism in a little different form for other corporate debtor also, so that the whole pressure on the CIRP proceedings, where currently quite a lot of cases are pending after, particularly after the what you call the suspension of the CRP up to this 25th March was there, that has been now opened. There were pending cases already, and during COVID, such most of the improvements were not done. And those period of the default, of course, that is already what you call suspended default, where you cannot have a claim. But later, if there is a default after that lifting, as well as the case, there will be heavy rush. So they will be finding another alternative mechanism of resolution under the pre-pack for them also later. So this is my observation on the pre-pack for MSME. Yeah.
Yeah, sir. Even by whatever you say, that has been already passed by ordinance and already assented by president, and there has been corresponding changes in the IBC law by inserting new section.
Yes.
Totally in IBC there were 255 sections. Now it has become 280 sections by incorporating these changes. So, and yesterday only the regulation which are related to the IBC law has been already notified, and it has already displayed on the website of IBBI. So thank you, Narendra sir, for
so for all of you professionals, what I'm telling as a professional and IBC practitioners, you will be getting another opportunity for solution for MSME. And of course, you are as an insolvency professional, your role will be very limited to that extent as compared to the other proceedings. But still, and other professionals who are primarily taking care of MSME should take care now. Can there be a resolution mechanism which is acceptable to the what you call secured creditors, so that they will be able to get into on in a much better position? Yeah.
Yeah. Mr. Sandeep, you can continue.
Yeah, thanks a lot. In terms of the Vivek Patra, which we had discussed, and the objective of the Vivek Patra, in fact, is to bring to the knowledge of all the regulations and changes which occur on a day-to-day basis, on a monthly basis, so that we are able to discuss those and update our knowledge on those. So one of these is the RBI notification for refund of interest on interest, which was promulgated by the Supreme Court. And there's a notification which has been issued by the RBI asking banks to give effect to that Supreme Court order. So that's one thing. I'm not going to show that on screen. The second one is the governor's policy statement on the RBI policy, which just came in on the 7th of April. And I'm going to just display the gist of the policy statement. So in fact, if Mr. Narendra wants to actually take over the gist of the policy, you would want to take that forward?
Yeah, Mr. Narendra will be taking it forward. I think he must be having his, sir, can you just take it forward?
Yeah, that one
so
that is
I
after a lot.
Yes, sir.
Yeah, now I will cover other things, but here there is another, this is about the RBI policy, you mean? Right.
Yeah, that's right.
Yeah. Okay. Yeah. This time that has been almost expected that the RBI will have a status quo, and the entire market participants were expecting that there will not be change in the repo rate, and RBI will continue to have accommodative stance as far as the what you call their approach to the liquidity, as well as making provision for growth. So as expected, that the RBI governor in his policy has kept the repo rate and the marginal standing facility rate and the bank rate and the reverse repo rate all unchanged, as you see in this presentation. So another important that continue with the accommodative stance in so long as the what you call governor or the Reserve Bank get a feeling that the India has completely recovered and India has fairly better growth and their RBI continuing with the so much liquidity infusion and making available on a day-to-day basis around 6 to 8 lakh crores of liquidity in the system uh, or other measures which they have taken in line of the COVID are there to be reversed. That was the fact that the accommodative stance has been continued. However, this time for Reserve Bank, one area was the inflation. Currently, the inflation level, even on the core inflation or the CPI inflation or the wholesale inflation, all looks are little higher. Even though RBI has been now given continuation of the target of inflation targeting of 4%, with the either side, 200 basis this side and that side of a maximum of 6%, and that was been made applicable for another 5 years. But the last 1 year, what has seen that the RBI has been always what you call the inflation remained on an average is 6%, and they were on the brink of the target. So that is during that period it may be explainable, but otherwise if it continuously goes beyond the RBI target, then they are to explain to the government. But currently again inflation expectations are also given where that the it is in the 5.2% or only at the end of the year it may be around 4%, because the international commodity prices have gone up, whether it is metal, steel, copper, or similarly the petroleum prices, so the oil prices have gone up substantially, and India particularly due to the state level taxes we were not able to bring down the petroleum or diesel prices, and as well as the gas prices. So but other side the monsoon is expected to be very good, and there will be a record rabi crop production. So the food related inflation may be moderated, and the rural economy is still doing very well. And the second aspect the RBI had a problem was the new COVID, which is now much higher than the earlier COVID numbers, and its speed of increase has been higher. But since India has taken a lot of measures for your medical facilities, as well as they have used the lockdown, the earlier lockdown very fairly, and in the recent GST and other things, GST 1.25 lakh crores and other factors, then some of the service sector and the manufacturing sector also in the recent slightly affected, but is above the 50 basis. That is much better. January was better, February has been moderated, and March the growth we have to now see. So overall, the Reserve Bank or the MPC, that is the Monetary Policy Committee, agreed unanimously that let us continue with the accommodative stance and also the current interest rate and also the liquidity measures. And it continuously was assuring the market that we are going to take all measures to see that there is enough liquidity. And accordingly, that last year they have done a OMO of 3.13 lakh crore. And the first time Reserve Bank, along with the continuation of OMO as well as the switch and all other whatever measures they were making, including increasing the HTM and providing more space for the banks, particularly to subscribe for the government borrowing. And last year they successfully managed the central government 13 lakh crores and state government maybe 8 lakh crores. And this year they have to again manage 22 lakh crores, around 22-23 lakh crores, both central and state. And the first half year 7.5 lakh crores. So the Reserve Bank gave one that government securities acquisition program. Now some people, market participants, make it that this is equivalent to the quantitative easing. For the first time, RBI has promised to purchase the government securities, but they have been promising. But can that be future go into the purchase of corporate bond. Internationally, they purchase corporate bond as well as the government securities, the what you call Federal Reserve, all that. And the quantitative easing has been a successful measure, 2008 also, and even now also. And in the latest fiscal measures also, US has given. So here, this they have said that immediately for the first quarter, they again that uncertainty in the market, and that resulted in 10-year yield going up to even 6.25 or 3.30. And the last year, the entire borrowing of the central government, the RBI has managed at average cost of 5.90. And that has resulted in at least 9,000 crores of interest benefit to the government. And also the maturity has been extended. So the government came with a lot of long-term bonds, means securities. And that's how the RBI wants that this year also, without much effect to the market, as well as to the other productive requirements of credit, the government borrowing will have to be made easy, and we should give space for private borrowing also. So that is where 1 lakh crore for the first quarter. So it is expected that the full year, it may be 4 lakh crores or even more. And similarly, this particular program has been made as what you call one government securities borrowing, or what you call the acquisition program one. One means there can be multiple other 2-3 measures also. So Reserve Bank always saying that I have enough measures in my control. So they have two. One is to see that the 10-year yield doesn't go up. Second is, now there is internationally the interest rates have started moving up, and the regulator also has been thinking of 10-year yield in the US has gone up, and they are also targeting inflation of 2%. And with that, there is a likely that the money which has been coming to India for particularly bond market and debt market may be taken away for that country when they are getting a stable return. So that has not happened in India. Other countries, neighboring countries, some of the emerging countries, it has been happening. So India still provides that is where you have to also have exchange rate management. The Reserve Bank has to see that all the dollar coming will have to be taken by the Reserve Bank, and equal rupee they have to release. Now, releasing rupee continuously also may lead to inflation. So they have to ensure that there can be, the Reserve Bank came with, I think, forward purchases of, or what you call, the dollars, and temporarily they also told for our Indian banks, you can place your forex money even in abroad. So in view of that, the exchange rate management is also very important. Indian rupee should not get what you call much appreciated, and it should also have a reasonable depreciation so that the export becomes competitive. So in 12 objectives have been achieved by this particular measure. So this is the one of the important measures, and this is the first time RBI has changed this policy. So we can expect that for some time interest rates will remain very low, but currently, if the inflation is not controlled, it leads to a negative interest rate. For some time, all of us who are savers, we have been getting a negative interest rate, and we are supposed to get used to that when you have a greater good of ensuring growth. Unless the growth takes place, and that too at a lower interest rate regime. So one thing is for the banks also, if the government securities goes costly higher, one is it is the interest, if the yield is going up, that means they don't participate. Second, if the interest rate is going high, the last year's all G-Secs will have a discount, or means there will be a provisioning requirement. So how are you to manage these things in such a way that the banks don't get too much loss? So this we should see that for maybe only at the third quarter or the last quarter, RBI may start looking at some interest increase also, and they may also change some of their regulatory measures, as well as regulatory measures already, like CRR has been already announced back to 4%. Then the long-term repo also they have done, and by taken some 2 lakh crores, but they have ensured that there is a around average surplus of 6 to 7 lakh crores. But when the credit starts growing, particularly in the busy season and in the next half year and all, that is likely. So that time, how both the twin purpose of credit growth as well as the government borrowing, how to manage. So RBI, we have to watch. Thank you.
Thank you, sir. It was a completely thought-provoking and complete, I should say, an assessment of the monetary policy. I wouldn't have been able to, say that or talk about it from my point of view. I couldn't have been better than that. To come to the aspect of IPOs, in terms of the IPOs which had happened in 2021 March, you can see what has happened. All the IPOs which were there, and with the last of them being Barbecue Nation, all are slightly up from their issue price, except for Kalyan Jewelers, which is below the market price, the issue price, whereas Suryodaya Bank also is below the price. Even Craftsman's Auto is below that price. The only, I should say, there are 2 or 3 which are really doing well, which is MTAR, which is at 1082, which is up 100% appreciation from the issue price. And the other one is doing well, which is Nazara as well as Harbana and Lakshmi Organics. In fact, Nazara is approximately 40% above the price. The issue there is, in fact, the issue there is that it's a company which is into gaming, and appropriately during the lock-in period, I think this is something which will be in demand, and that's one reason why if you see the US markets also, this tendency has been there. Going forward, in fact, what has happened, I would say, in terms of the IPOs, is reflected here in terms of the Macrotech Developers Limited. In terms of that IPO, where the situation, I'll go to the next slide, where the pricing is between 483 to 486 per share. The issue closed yesterday, and if you see the anchor investors, I think they were the best anchor investors one would have liked to be in a company. Across the board, across the world, globally, these are the best investors in an IPO. It's a great happening actually for the likes of CDPQ, Abu Dhabi Investment, Nomura Capital Group. It's a fantastic, names which have come in. The other side of it is the total issue size, and the subscription to it is only 1.36 times. And look at what has happened. The qualified institutional buyers is 3.05, which means there's been demand there. But the non-institutional and retail investors have not put in amounts worth the name. And why is it? Possibly because of COVID and the reaction to the IPOs which have come in lately, and also from the point of view that in terms of the real estate market, though the real estate market has really started improving, with the absorption rates actually improving, which is there on the next slide, which has been improving through 2019 to 2020. The issue is that the sales have been in the what should I call, the lower segment of the strata of society, where the government also has actually instituted a push towards that segment. Now, this is something which is relevant. in terms of the IPO, in terms of the group itself, the erstwhile Lodha group is much higher in terms of revenues because they are in the MMR region. But in terms of volumes, the Prestige group has much higher deliveries in the meters per square measure of square feet which has been delivered to the market. So again 71, Lodha has about 57, and all of the others are much lower than the Lodha group and Prestige. To come to the SWOT analysis, the brand name has actually been one of the things which has attracted the investors, especially the the foreign investors. But if you look at the problems which have occurred, all of their projects have been in the affordable, as I said, affordable segment market and the mid income segment, and all have been, whether it is Palava, whether it is Thane, all have been in a segment which is, in terms of pricing, are not as high as the actual Mumbai region. They are actually going into the Mumbai region, is what they are saying in the prospectus. In the RHP, it is mentioned that there would be developments in the proper Mumbai as well. And plus, the opportunity for them is to develop property which is there in unutilized space. So that also will, be good for them in the long run. In terms of the opportunity, the other opportunity which is there, as I said, the land reserves, plus they are also going into the logistics and industrial portfolio, where they have something like 3,800 acres of land, and they would like to convert about 800 acres near Palava for this commercial purposes. In terms of the problem, the biggest problem is the high debt. They have been able to reduce debt by about 2,000 last year, but the debt remains high at around 16,000 crores, and they'll be able to reduce it by about 2,000 crores again by way of this public issue. In terms of contingent liability, the contingent liability is also high. They have problems in terms of disputed demand with customers. There are corporate guarantees, and there are disputed land cases. Then the problem of you have it in, and this is something which came up some time ago. There are problems in the UK. That investment which they had made, they have not been able to recover the investment of about 1,600 crores. So they are positive that will come in shortly, and they'll be able to reduce their debt level. The other aspect which, and this is relating to all, I think, builders, is the related party transactions. So there are related party transactions, and the other part is that the Ind AS, which is actually used to prepare the accounting, they are not in line with the IFRS in some terms. So the issue there is that there might be pitfalls as more and more details of their accounting is thrown up for investors to have a look. The last few, the COVID period, they did very badly in terms of the problems on their profitability. They had a huge loss actually in terms of the 9-month period ended December 2020. Then the second thing is there are no definitive agreements signed for apportionment of money raised for how they are going to actually utilize those that money. So they are saying that 375 crores would be used for development rights. They will purchase the rights to develop the properties of stressed assets, and they'll try to develop that with the minimum of money going into these stressed assets, and they'll complete the whole thing and try to earn income. 1,500 crores will be repayment of debt, and the balance will be for general corporate purposes. As I said, COVID has hit them hard. There are legal cases, as I've already said. Most importantly, there's a risk of concentration of properties in the MMR region. All others have gone across India, but Lodha Group is concentrated in MRR, so it is a problem. And especially now when the COVID situation is at its height, you have so EBITDA would have been impacted because of the COVID situation. You have the dynamic nature of threats due to Rera as well as the income tax, which may impact their businesses. Foreign currency denominated debt, and that is something which I just told you about, the UK problem they are facing. That also will be, we have to see how it comes out. I would like to thank the participants, in fact, and a big thank you to Aditya, Anurag, Aishwarya, Ajay, Archana, Hemant, Mitesh, Mr. Narendra, Pramod, Mr. Arkanan, Rakeshji, Robin, Rucha, Santosh, Mr. Padmanabhan, Vikas, Vijay, and Yogesh. And I'm sorry if I've missed out any names. I can see one person there, Mr. Hemant. Thanks to you as well for actually taking this role on your shoulders to actually take the whole of the conference call, or what we call the web link call ahead.
Thank you.
Over to you, Mr. Hemant.
I now request. Thank you, Mr. Bhat. It's really an interesting session, and thank you for updating the members about all the relevant IPOs as well as capital market. I now request Narendra sir to kindly take his update the member about BFSI updates and digital and fraud blockchains, etc.
Hemant, Hemant, sorry to interrupt. Mitesh here. Narendra, just I'll take 2 minutes.
Yeah.
Sandeep Bhat, you have explained very in detail about the Lodha developers, but couple of things I want to add. While you have mentioned rightly the concentration in the MMR region, they have a highly leverage. The ratio also is there. But apart from there, if we see Lodha Group per se, they don't take the projects which is unlike like a township types. So in I feel say Greater Mumbai, we have a very less amount of such lines which is available where they can go. It's a greenfield option which is available. And secondly, the one topic which I am covering in today's session on the self-redevelopment may be a disruptor to the real estate industry. Just want to add on that.
Okay, thank you, Mr. Mitesh, for updating on the about redevelopment. I request now Mr. Narendra to kindly update the member about BFSI, blockchain, and so.
So at the outset, I am very happy that the think tank group, all of us, have shown our appreciation of the bankers, and that has been mentioned by government itself, and the committee on the home ministry committee has noted this, and the ministry has sent a letter. And that later now IBA must have communicated to all the banks and to the board, private public sector bank board. And yesterday our finance minister also asked that as our health warriors, why not make available the COVID vaccine facility as the priority to more than 11 lakhs banking staff, so that because they are continuously in line with the or means customer interface, so they need to be protected. So coming to the banking scenario, the last what you call the year 2019 and 20 and 2021, you have been finding that there has been a vast improvement in terms of the banking scenario. And the last year, the banks have started not only making profits, that is public sector bank, and also making quite a lot of provisioning towards the NPA. And that's where even though by 2020 and in the last year also, even up to September or December, the NPA level has been coming down, and that is due to the profitability there, and the provision coverage has been improving. To be specific, that the NPA has been from 8.2% as on year 2020. In December, it came down to around 7% or like that. And even if you take into account due to the standstill provided by the Supreme Court, as well as, of course, until earlier there were what you call moratorium up to August. And similarly, there have been given what you call the Reserve Bank gave one-time restructuring for COVID-19 related assets. These were all the little, that fear was there, whether there will be a large number of restructure, or after the moratorium is lifted, how banks are likely to face the NPA situation. And similarly, if the standstill is removed, which is now removed by the Supreme Court, how are the likely scenario of NPA? Now, from the figure, what we see that the banks have been able to manage that very well, and the restructure per se may not be more than I think 2 to 3% of the loans for the banking system. So even though KV Kamathi has around 26 sectors have been identified, and there have been quite a lot of maybe 15-22 lakh crores which are under stress. But one thing happened, that the corporates were able to raise substantial amount, particularly better rated corporate from the debt market. And you would have seen RBI also mentioning more than 10 lakh crores. And similarly, what now currently talked about, that quite a lot of corporates now, they have started assessing the market through IPO or maybe follow-on issue. So the equity market also were able to get them enough money. So it is around, sometime back I saw through equity, more on debt also, it is around 10 lakh crores they have borrowed. So the corporate sector also were able to make better profit by rationalizing their cost, as well as increasing their final product price and getting a better margin of profit, which all of you are stock market, you must be knowing that consistently corporate profits are better. And it is now in the December result also must be, and March result also is coming. So with that, the corporate sector is able to de-leverage their balance sheet. And it is now expected that in the corporate sector, which were earlier was the major incremental NPA or incremental restructure for the bank. But except that is some service sector, like that restaurant or civil lines, means your airline, your aeroplane, or what you call air and transport services, and also maybe service sector still, or tourism and all, some affected. But the impact of NPA from the corporate sector will be minimal. And that even the percentage of corporate sector, depending in the bank credit or the bank credit to the corporate sector, has done now below 50, hardly 40-45%. So now they will be more on going into the debt market. This is a good sign. So other NPL were in the primarily MSME. And MSME, you are aware that the government came with the credit guarantee, that is the guarantee scheme for what you call emergency line credit of and with the limit of 3 lakh crores of guarantee. And no collateral, no guarantee of by the customer, all that. And banks sanctioned almost, I think now latest maybe 2.59 lakh crores they have sanctioned, and parallelly more than maybe 2 lakh crores have been availed, and that now have been covered even up to 500 crores of turnover MSME and 50 crores of outstanding, and the 26 sectors identified KV Kamath has been also be included in that. And as on latest, I saw some of those service sector, which I mentioned in the earlier, including tourism, sports, have been included in the scheme, and the scheme has been extended up to 30th June. So this has given some stability to the MSME, other than the Reserve Bank one-time restructuring also. But only one worry which is coming, that is from the second wave of COVID. And here also, the one which are likely to be affected will be the MSME. And if there is any loss of employment or lower income for the middle income group, then maybe the personal segment is likely to get some affected. These are the what you call some observation that whether it may result. So from the 7% level, it is now maybe March it would have come to 8.99%, which is as per the CRISIL report. And even if you take into account 2 to 3% that is restructured, still it is not more than 11 to 11.5% NPA. As far as the RBI financial stability report, that no, they mentioned that it may go up to, of course, that was prior to this getting the restructure. The NPA level may go up to 14% in the extreme scenario, and base maybe 13.5. Now that has been moderated, and going forward, and of course that earlier I would have mentioned, the provision coverage has gone up to 72% in the bank. And similarly, that morely private sector bank as well as the public sector bank, they also mopped up capital. Private sector bank in the initial period itself, 70,000 crores they mopped up, and the public sector bank around 25,000 crores of direct capital, as well as maybe then they went for a perpetual bond, and the government also gave them 20,000 crores additional capital this year also, and which has recently released to 4 banks. So with that, the capital adequacy or the primary capital, the core capital also level of the banks have gone up. So now one the Fitch says the average pre-provision operation profit PPOP is 4.8% loans for the 9 months F21. This is for private sector, and contingency reserves are 1.2% of loans, and core capitalization of CETI ratio for private sector bank is 15.9. So you could make out private sector bank the ability to withstand any future shock. Now, as for the public sector bank, same ratio, the average pre-operating provisioning operating profit, that is 3%, as against that earlier of that 4.85%, and the contingency reserves are 0.5 as against the private sector 1.2, and the CET of ratio of 9.8 as against theirs is 15.9. Always private sector bank had a better capital adequacy, so you cannot really compare private sector with the public sector. But that what I want to say, that even going forward this year, even if you say by 2022 as per the CRISIL, the NPA level may be 10.5 to 11% in spite of the standstill removed and all that. So overall, the profitability and the financial system of the public sector bank as well as the scheduled commercial bank have improved. And another thing is, banks have already made provisioning for the such standstill account by a pro forma you, and they used to disclose the data to you. So that is the one important. Similarly, the moratorium thought that it going, but the average was 40%, and in the later period, the moratorium also has been paid. So I think the impact of moratorium will not be much felt. And this year, the credit growth, see, one thing is that parallelly, the banks in the recent days were not growing the credit. It is hardly 6% for FY 2020. And in this year, half year, because the corporate credit is not growing, then you have to focus on MSME, personal segment, and other agriculture. Agriculture has been doing very well. So in that only you have to get the credit growth. And now, since the PLI scheme has been announced, similarly, infrastructure credit has been very important for the 111 lakh 7,000 crores of project in the next 5 years. And there will be definitely private sector investments in the infrastructure sector, as well as the privatization of the lot of corporate PSUs by the government. Similarly, in the monetization of assets, and similarly the new instrument of InvIT and RET and all that, there is a going to requirement of funds for the corporate. So it is expected that by 2021, even though the credit growth may be in the same level, whereas in 2022, it may be go up to 9 to 10%. And that is, or maybe even 10.5%. That is the one we are expecting that the credit growth will go up, and that will be a good position for the banking sector, that they can make enough profits to provide for any further banks, so that because the capital is not only needed for meeting the such unseen shock of the second wave or all that, they are also required for growth capital. So now in this connection, the privatization of two public sector banks by the government, and on 14th their Niti Aayog, RBI, and as well as the Ministry of Finance is meeting, and all of you are looking at who are those two private sector banks. And that may be a good sign to see the real true value of the public sector bank, because even though that I feel that the public sector bank could not get the real value, because there are areas recently, like that Jan Dhan Yojana, or in the various schemes of the government, you find that the public sector bank participation has been much larger. So government for all various their schemes, there is a role played by the public sector bank. So of course, not that because I am a public sector bank, but I am just telling that has to be appreciated. However, in the line with the government policy of strategic and non-strategic sectors, they have to necessarily that the two public sector bank getting privatized. So that will enable the other public sector bank also to get true value, and that has been witnessed in the market. With the now the market is getting a feel that in the next 2 to 3 years, all the banks are likely to get a better valuation and better price, and there is a lot to be covered, and their performance may be improving with these opportunities coming from the budget, as well as the new areas of growth, including the pharmaceuticals and all other sunrise industries. So I think similarly, there is another announcement of establishment of developmental finance institution with initial capital of 20,000 crores. Currently, it may be by the 100% by the government. Then later they will be reducing to 26%. And there is also mention of any other private sector initiative of development finance institution coming. And this development finance institution have been given innovative method of raising funds by way of maybe indirect way of taxation benefit for the investors, as well as that the guarantees for multinational raising of funds. So this, they are likely to raise a portfolio of 5 lakh crores within a period of 5 years or 3 years maybe. And so one establishment of one development finance institution may not be sufficient in view of the such a large infrastructure credit requirement. So you may find such a new DFI coming in the, so this is also a good sign, but they will not be like the earlier erstwhile DFI, where they could once the government relaxations were taken out, they had to be converted into universal banking. So I think here it will be run by a specialist people and specialist experts, and under the very professional management. So this will get a good success. Similarly, the establishment of national asset reconstruction. Hello, please. AMC and alternative investment management, where this AMC will give these projects for what you call revival and getting a better value. So this also may be good in sign that all the legacy NPA cases, will find through this methodology. Similarly, the IBC has been a great deterrent for corporate default, and there in the past around 45% recovery has been the case with the IBC, even though they may be some of the big cases of more than 100% recovery. Average recovery has been good, and Reserve Bank also acknowledged other than the first one was the IBC recovery, second was the surface recovery. So and other DRT and Lok Adalat and all. So now IBC has been now resumed. So we expect some of those legacy case pending also will be expedited. And as earlier we talked, a separate pre-pack for MSME has been talked. So these are all the issues coming from the what, and similarly IDBI Bank will be privatized. So these are coming from the banking side. Other side, NBFC, the NBFC AUM growth has been 20-24% in the past, but maybe in the year 2020-21 it has been now slightly moderated because they had to mainly focus on liability management and mainly on liquidity management, and also they faced the moratorium. They are also faced the slowness in recovery, and they had to pass on. They were to get the special consideration by the Reserve Bank and the Government of India in providing various facilities of fundraising for them. And parallelly, of course, they also manage their accounts. And it is expected that in the current year, their NPA level or such of those stressed accounts and other things, maybe 1.5 lakh crores to 1.8 lakh crores. That may be the NPA level in the NBFC. But after the ILFS default, as well as other these recent difficulty, but one thing is certain that NBFC have managed very well. They have understood the ALM very well. They have also understood the risk management very well, and they are taking care of their what you call profit and profitability. And the recovery also has come up to the pre-COVID level, maybe 95%. So that is a very so it will ensure that better asset quality. So this is the likely scenario in the NBFC sector. And recently there is RBI has issued a one paper where they are likely to make differentiated level of regulation and supervision, and they have classified the different categories of NBFC in different levels, and they level 1, level 2, level 3, level 4, like that. And they also have thought that the initial capital for NBFC from 2 crores will have to be raised up to 20 crores. And the industry organization like FIDC has represented to the RBI that for smaller NBFC also there is a role, and for them 20 crores over a period, even though some time is given, but may be difficult. So you have to face it out, and that is where because they found that quite a lot of NBFCs are not really active, and out of 11,000 NBFC, maybe 500 NBFC may be the real one which are really doing well, and others are all with a smaller activity. So, but there may be a similar NBFC which may be catering to the niche sectors. So one more thing is the RBI internal working group report on banking and NBFC. All of you are aware that for first time, the internal working group again has recommended that with the necessary supervision and control, and with the amendment to the Banking Regulatory Act, and with the avoiding of connected lending and other and higher regulatory mechanism or supervision mechanism, the corporate sector also should be allowed to establish banks or have the banking ownership. And similarly, they have said some of those NBFCs which are already achieved a peak level and with the good record and all, they may also get converted into bank. Third is the promoters holding, which are now currently over a period of time, they have to bring it to 15%. It can be enhanced to 26%. And the third, another one was for the non-promoter group, the holding level should not exceed maybe 15%. So these are all the some of the recommendation of that, and we have to watch and see whether the RBI will what extent they will accept this, and we have to see. And now the SARFAESI Act also has been made applicable to smaller NBFC with the high that also has come. One area which will focus during this year in NBFC is co-lending. Now, this is a very good method where they are good in originating with a lesser capital allocation. The bank also will find extremely good in getting co-lending, and so this portfolio with the recent regulatory, what you call, little more clarification and relaxation, that will get a better focus. And this year there will be more focus by the NBFC in asset securitization as well as assignment of debt, by which they will be able to meet the maturing liabilities. And they are parallelly, they were also enabled through incremental capital and all, improve their rating so that they can get into the capital market in raising bonds. So this is as far as the NBFC is concerned. Now, I was asked that digital banking, one thing all of you are aware that, and you are experiencing also, during this COVID, what has come very much in the focus is the digital banking as well as the digital working environment, and the entire all over the world, they have given more focus on digital modernization, digital upgradation, and the new methodology of cloud computing. Somebody maybe expert will be better able to explain, or machine learning, artificial intelligence, and your all the blockchain, all have been taken more care with the cyber security, so that because they are aware that this type of virus are likely to come. So how do you ensure faceless business and contactless business? And so the digital banking in India, through the establishment of National Payment Corporation of India, and the product of UPI 1 or UPI 2, as well as the push given by the Honorable Prime Minister for entire digital India, and with the Jandan, what you call your Jandan Yojana or Aadhaar, as well as mobile penetration. So your Jandan account as well as Aadhaar, as well as mobile penetration. With that, we have ensured that today the reach of the mobile banking or reach of the government entire direct benefit transfer, or their their scheme implementation, or getting even land record, or in any including maybe passport, everything has been made today through the digital mode. So as far as the banking concerned, the UPI has recorded the maximum transaction and value in the month of March. To be specific, 2.73 billion transaction with the 5.04 trillion volume. That is the value in the UPI, as well as now your interbank banking payment system. That is also one of the best method introduced by the India, and it is a even world that UPI and all that. Today the other countries have started copying our product, or understanding how the NPCI has been able to make a penetration in this type of payment mechanism. So that also interbank payment system, that is 3.63 lakh 60 billion transaction with 3.27 trillion volume. Even the latest, the FASTag, 1.93 billion transaction with 3,086 crores. This is as far as the March is concerned. So now the other area, that cyber security also getting more attention. Now during the COVID, as other side more digital, robotic, all that has come. The other side, quite a lot of cyber security attack, and our think tank, you have covered cyber security in a great detail. So that is where, so we have to know how to make the data protection and data privacy, data mining, and how are we to ensure that the impact of cyber security in the financial as well as in the our what you call branding or our reputation does not affect. That is the another area which has to be taken care. Now coming to the insurance sector, that all of you are aware that in Indian context, the insurance sector even now has not made a much penetration. It is only 3.71% for 2019. Now after that, 2021 must have improved, but it is not to the extent in the international other countries. And whereas of course the insurance industry in India is expected to reach US dollar of 280 billion by the end of 2020. And during the COVID, everybody felt how health is very important. other than the Anshuman Bharat scheme of the Prime Minister, where earlier also insurance cover was there. The IRDA took the initiative of a separate COVID-19 policy, and that has come handy for poor people to get operation and all that. And that scheme would have also got quite a lot of coverage, but at the same time, quick claim would have come. So that another important that the government of India has consistently increasing the foreign companies' participation in insurance. That earlier it was 26%, then increased to 49%. Now it has been in the recent budget 74%. Similarly, one of the general insurance company is likely to be privatized. And all of you are expecting or watching or waiting for the great IPO of LIC. Now, what is the extent of valuation? How much percentage of IPO is likely to come? And the other side, they say 95% of the profit is distributed to the policy holders. What is the juice we are getting in the LIC? But for the government and the thing, this is a very important measure of privatization of one insurance company as well as IPO of LIC. So I think the insurance sector, as well as, of course, both in the banking and insurance sector, both the regulator have opened up the regulatory box in a way of having an incubation center. In the Reserve Bank concern, they are inviting a lot of your fintechs to be work under the regulatory environment. And once the RBI gets a feel that this is a good fintech mechanism for banking supporting mechanism, then they get into the commercial mode. So same way on the IRDA also has started same methodology, and their first lot they would have permitted so many private and public sector insurance company to operate some new scheme, and that is the continuous process. Now in the life insurance, LIC's role and LIC's what you call premium collection and the market share continues to be a little higher, but from the old system of 80-90%, now private sector also has made inroad into the life insurance. But in the general insurance, the private sector has played much higher role, and their participation has been very high. So with the opening of the this sector and to getting privatized also, we can expect better customer related, better technology enabled, and good what you call insurance environment in India. So these are all some of the subject which was given to me. IBC we have already covered. As I mentioned, IBC is one of the important method, and they will continue to be good method. And with the other innovation also, that corporates will be having a deterrent, because in the IBC particularly, if they are intended defaulter, they by section 29, or I think other experts are there, they are debarred from participating. So that is where quite a lot of them, even big companies, lost their management. So I think today banks are in a, or the what you call your secured creditors are in a better position. So you also find that such defaults in the banking system has been now lowered. The other side, they become very cautious. So the such default also coming less. Similarly, Manoj has talked me about what you call fraud. Now, one side of the fraud is due to the what you call IT related fraud. Some are maybe human resources fraud. But in the recent days, as I mentioned, in the legacy cases and all, some of the corporate default came very well in the picture. Now, there is a mixed, of course, if for some of due to economic fallout, or the decision fallout, or sometimes from the higher expectation, the suddenly economy coming to very low GDP, so the overall cash flow getting affected, or somebody, some of them, that is a very explainable. Similarly, going to lot of growth, core and non-core, and sometimes you getting stuck up. So enterprise has to be appreciated. That is the one thing, that type of default is appreciable. But the willful default, or where monies are diverted for other than the purpose for which you are taken, or monies are taken away to international what you call destination, and Similarly, some of the borrowers are not traceable, all that. So the government is doing quite a lot of measures to bring them back to the legal process, as well as now the Ministry of Corporate Affairs has brought quite a lot of what you call amendments or new laws. And similarly, the anti-money laundering, all that measures are getting a ecosystem where this type of economic default or economic fraud need to be contained and minimized or even avoided, totally avoided. I am sure that in an enlightened society and enlightened entrepreneurs, as well as the entire our ecosystem, will go into a clean mode of corporate governance, clean mode of and professional management, and with a professional board. You are also aware of this. Recently, there is a paper by the SEBI on the role of independent director. How are to we see that they are properly identified and selected, and the role for minority shareholders in majority selecting the independent director. Of course, these are all proposed guidelines. And similarly, the role of audit committee, the independence of the audit committee, and for auditor roles also have been quite a lot of measures of changes, and as recently also, and now the audit trail of the transaction which has to be also done. So one way, there is a lot of regulatory things are coming. So one is the cost of compliance and making the system available for the new guidelines. It will be a challenge on the corporate, but other side, for the investors as well as for all the minority shareholders and for bankers or everybody, there is a what you call perfect system of management and growth. And at the same time, we are all appreciable that our Prime Minister has said during the budget as well as outside that we consider the role of private sector. And as against earlier disinvestment, we are now talking about privatization. So there is a role for private sector, the entire industrialization, the entire the new PLI development or the infrastructure, all that will be more on the public-private partnership. So we need good entrepreneur, most that not only the large corporate, even MSME and smaller enterprises, similarly startups, and that's where we have to enhance our GDP, and we have to become number maybe 1 or 2 in the global world. With this, I conclude my address. Thank you.
Thank you very much, Narendra sir, for updating the members about banking, insurance, and other spaces. Thank you very much, sir. And before I now request Mr. Murtuza to be ready with his presentation, I request Mr. Paddy Iyer to kindly refresh the member with a song. Mr. Paddy Iyer, please.
Good afternoon. Thank you very much, sir. If I sing, nobody will get refreshed. It is another charter account who is going to do that. So I need a share screen, sir. I think it's there.
Yeah. So are you continuing with your song?
Yeah, 1 minute.
Wow.
We can't hear. Voice, please. We are unable to hear voice. If you can make volume a little bit higher.
Paddy sir, you'll have to go and share your computer audio.
Audio.
Yeah, you have to just go and click on top of it, and there will be an option called share computer audio.
1 minute, 1 minute. Let me see where it is.
Are you hearing the song?
No, we are not.
हाँ, but उन्होंने तो करते रहते थे, हमको सुना नहीं है ना. Why not you tell Paddy?
Yeah.
Is it okay now?
Yeah. He's trying to realize.
Paddy, we are not hearing.
Yeah. We can't hear.
Anyhow, next time, otherwise it's good thing his action will be seen. So it is
Yes,
totally Bharat Mata ki Jai.
Yes.
Yeah.
Wonderful theme. Superb.
Yeah.
Okay, good. I think.
India growth story. I think it will come. It will come. Certainly. It will come.
Yeah. Okay, you try once. Otherwise, we can.
So there are many songs. I think there are 4 or 5 songs. Play all of them.
I think you should start the next one.
Request all to join. Request all to join. Put your videos on.
सुनो गौर से दुनिया वालों, बुरी नजर ना हम पे डालो. सुनो गौर से दुनिया वालों, बुरी नजर ना हम पे डालो. चाहे जितना जोर लगा लो, सबसे आगे होंगे हिंदुस्तानी. सुनो गौर से दुनिया वालों, बुरी नजर ना हम पे डालो. चाहे जितना जोर लगा लो, सबसे आगे होंगे हिंदुस्तानी. हिंदुस्तानी हमने कहा है, तुम भी कहो. हमने कहा है जो तुम भी कहो. हमने कहा है जो तुम भी कहो. जलते शरारे हैं पानी के धारे, हम कांटे कटते नहीं. जो वादा करते हैं करके निभाते, हम पीछे हटते नहीं. वक्त है, उम्र है, जोश है और जान है. ना मिटे ना झुके देश तो अपनी शान है. वक्त है, उम्र है, जोश है और जान है. ना मिटे ना झुके देश तो अपनी शान है. हमने कहा है जो तुम भी कहो. सुनो गौर से दुनिया वालों, बुरी नजर ना हम पे डालो. चाहे जितना जोर लगा लो, सबसे आगे होंगे हिंदुस्तानी.
Thank you very much for our refreshing song, Mr. Paddy. Thank you very much. And
Paddy sir, please introduce him. Most important.
Yes, sir. This was CA Kartik Srinivasan. I don't know whether he is a CA who is a singer or a singer who is a CA.
Wow.
Good.
India
Because
growth
he is-
story.
He is
For
a
every
professional.
citizen, Hemant Bhai said, what he has said will refresh every global citizen from whichever country. All the CEOs, CXOs, CFOs, specialists, everybody will be refreshed. Wonderful
Good.
words and insight. The next one, Paddy sir, the next one.
I think somebody is already playing it.
Very good patriotic song by CA singer, Mr.
Kartik. Kartik.
Yeah. Very good. And I hope all members have enjoyed it and enjoyed the music.
Yeah, superb. Yogesh.
So this is Mr. Yogesh Arya.
ये जो देश है तेरा स्वदेश है तेरा तुझे है पुकारा ये वो बंधन है जो कभी टूट नहीं सकता मिट्टी की है जो खुशबू तू कैसे भुलाएगा तू चाहे कहीं जाए तू लौट के आएगा नई नई राहों में दबी दबी आहों में खोए खोए दिल से तेरे कोई ये कहेगा ये जो देश है तेरा स्वदेश है तेरा तुझे है पुकारा तुझसे जिंदगी है ये कह रही सब तो पा लिया अब है क्या कमी यूं तो सारे सुख है बरसे पर दूर तू है अपने घर से आ लौट चल तू अब दीवाने जहाँ कोई तो तुझे अपना माने, आवाज दे तुझे बुलाने वही देश। ये जो देश है तेरा, स्वदेश है तेरा, तुझे है पुकारा। ये वो बंधन है जो कभी टूट नहीं सकता।
Wonderful, superb, great.
Yeah, wonderful. It's education plus entertainment. So edutainment, I can say.
India growth story
Yeah.
for people who are ethical, integrity, and who are truthful. The person who is truthful, a very, very rare breed. A presentation from him now.
So I now request Mr. CA Murtuza Kachwala to give his presentation on assurance and risk management, analytics, techniques, and tools. Mr. Kachwala.
Whether you love the digital global team, whether you hate them, but only one criteria is there: ethics, integrity, and be truthful. A sample survey of 500 members of professional body all over the globe was done. Out of over 2 lakh members of professional body, less than 5 names came out. Less than 5, one by one, they will be shared. Whether they love us, whether they hate the participants, have ethics, have integrity, be truthful. That's our only expectation, nothing else. Go ahead.
Thank you. Thank you, Mr. Hemant Mehta, for being such a lovely host today. And I think, as what I can see, the background is being handled by Aditya Agarwal. So I think thank you to him as well. I think I was hearing Mr. Narendra M and Mr. Narendra ji talked us through about so many regulatory changes, and that too in detail. Sir, thank you very much. I think your knowledge and command over the subject and the economy and the manner which you covered was really commendable. And like maybe we were getting little tensed and worried also with so many changes and so much of expectation. But I think Paddy sir, by playing the music, he's lightened up the whole environment. And I think now again the participants will be ready to listen to one of the again a technical session. I would also like to thank Sandeep Bhat ji for covering about in detail about all the IPOs, and of course Manoj ji for sharing in as an anchor. Can I share my screen? Yes. Okay. Can you see my presentation now?
It is now it has come.
Okay.
Think tank. All presentations which have think tank written are acknowledged gratefully. Yes. And those people have a red carpet to any professional body, any regulatory body. You don't have to wait for 3 hours.
So really a big thank you to the think tank team for doing such a nice work and continuously having seminars, conferences, and webinars on multiple subjects and which are of interest to all the participants, and that too senior level professionals who are there, the CEOs, the CFOs, the CXOs who are members and who come here and attend to all of these. So a big thank you to all for all the selfless service and the work which we do for the profession. Today, I am just going to cover like 2 aspects of it. tools and technology in audit, data analytics, and continuous control monitoring. So as we proceed ahead, I would also like to acknowledge the whole digital team of ThinkTank who have been working continuously and ensuring that this continuous education keeps on happening. And I'll just briefly take all the names so that we show our gratefulness to them. Mr. Anupam, Aditya, Ajay, Anurag, Aishwarya, Archana, Hemant, Mitesh, M. Narendra, Pramod, K. R. Kanan, Rakesh, Robin, Rucha, Sandeep, Santosh, S. Padmanabhan, Vikas, and Yogesh. So a big thank you to all. And if I have missed out any name, extremely sorry. And friends, with that, let me move ahead. So as far as I like, what I understood was that I had 1 hour, but I think now maybe we are running a little late. So I will try to complete it a little.
You have all
early.
the time. You have all the time, unlimited.
Great.
It's music unlimited and technical knowledge unlimited.
Thank you. Thank you.
It's a summit. Summits to go. Summits in the auditorium are gone even up to 8 o'clock.
Thank you, Manojji. So here is one slide I think many of us will resonate with if we started our journey wherever in our first jobs, etc. So I still remember those days during my initial period articleship days where we all used to put those green ticks and the red ticks on the vouchers and this thing. And those times we used to call them vouching. And then when we used to post from the sales book to the ledger, we used to call posting. And the totaling we used to do on calculator and we used to call them casting. That was maybe the 1.0 era where we used pencils and pens and calculators. And then friends, like we saw the Excel, and then again we saw a lot of Excel basis tools like audit command language and idea, etc., where we could do analytics. So like the second 2.0, I would say macros, VLOOKUP, HLOOKUP, lot of stuff, including some CAT tools like idea and ACL. And maybe many organizations are still using those, the auditors, okay. But as we go to analytics 3.0, we are talking about various other programming language like an R, which is an open source, or an SQL, which is a licensed product, or a Python, and coding in that. But as we move ahead, we are talking about a lot of queries which are coming in, a lot of exception reports which are coming in. Why should the internal auditor or the external auditor do it once in a year and the internal auditor do it once in 2 or 3 years? Why don't we prepare all the queries and hand it over to the first line of business? And they keep on looking at on a continuous basis so that if there are any errors, they keep on correcting. And that is where the continuous control monitoring comes into place, and which is happening today. And there is a lot more which is happening today. Okay, so what we'll do is slowly as we progress ahead, I will talk you through various tools and technique. And friends, I will not only restrict myself to an external audit or an internal audit. When we talk about tools, we'll see how they can be implemented within the business by the CEO, CFO, operating team, finance team, customer service team, so that the businesses can become a lot more efficient and easy. So that is the background with which I would want to proceed ahead. As we saw, the 4 phases from steam to electricity to computing, and as the GDP also grew, we have seen this 4 journeys of audit. But normally, whenever we talk about any assignment within an organization, be it an external audit, be it an internal audit, or be it a project which we do in an organization, the first stage is what are we covering and what are the risk and what is the risk assessment, the objective setting. The second one is the whole planning of the assignment end to end, and then doing the various samples. What will we look at? And then as we go through the whole process end to end, and then we do the various testings, and then we come to a draft report, and then we come to a final report. And if we have either been an auditor, internal or external, or we have faced audits, I'm sure we have gone through these phases of planning, then walkthrough, and then reporting. Now, there are lots of tools which have come into place as we go into this journey, and I will showcase all of them. but talk through about a few of them as we progress ahead slowly. And see, before even I go to this, I'm sure globally, wherever anyone is doing any audit, and in India, the Institute of Chartered Accountants of India has come up with, or they issue the standard on auditing. The standard on auditing has like got a standard on sampling. It has got now a standard on analytic procedures. It has got a sample on IT tools and technology. It has got a standard on planning the audit. It has got a standard on documentation and evidence, etc. And similarly, when you are doing internal audit, there are standard on internal audit issued by ICAI in India, and globally by the IIA. There are international professional framework, the standards which have been issued by them. Now, when we talk about all of these standards, the standards which will be applicable and which we would cover a few today, it will be around like sample testing, analytic procedures, doing certain audits, how do we create documents, how do we create the evidences, and what do we preserve for future. But say, although we'll cover a few today and maybe some others later on as well, whenever we get an opportunity, but I wanted to showcase a lot of stuff so that we know and touch base on each one of them slowly, so that we know what all is happening around us. So while in an organization, when we look at the complete organization, there is a structure, there are departments, there are divisions. It could be sales, it could be marketing, it could be warehousing, it could be receivable, payable, it could be direct tax, indirect tax. Now, within those functions and departments within the organization, what are the various processes or activities? And each of these process or each of these activities, what are the risks? And by nature, where are the risks and where it can be a high risk or a medium risk or a low risk? And how will you, in terms of materiality and in terms of likelihood of something going wrong? And I think there is a lot of database now available where industry by industry, banking separate, insurance separate. In insurance, they go to life, non-life. In manufacturing, in retail, there will be like all these processes, the activities and the risks within those, and the controls will be placed. And by default, which are those areas which are high risky or medium risky or low risky, those databases are available. And that is what we are calling the heat maps. We are saying, how do they qualify in terms of impact and likelihood? So there are risk qualification matrices. And of course, with experience, a human being does, and there is so much. Like, okay, if there is cash handling has to be protected, and every day it needs to be counted. Otherwise, there could be a siphoning or like teaming bleeding. So this is all. Experiences are captured in some social intelligence products from which you can pick up, okay, in what process, what can happen. Let me pick up the second piece. And friends, today, lot of organizations are using Oracle Financial, SAP, some other ERP, but some small organization must still be using Tally or a Zoho or a X or Y. But when we look at large shared service centers of large organizations like the Adani or the Vodafone or the Reliance or the British Petroleum, which are set up now in India with 1,000, 2,000, 3,000 people, the invoices, the purchase invoices no longer get posted by an individual. So like what happens? The invoices are scanned, and through optical character reader, the information is picked up and the accounting entry goes. And hence, we go back to the basic, and the basic and the first step is that the masters have to be updated properly. When we talk about vendor, in vendor master, there should be the name of the vendor, the type of organization, there should be a master code, but then what services or products do I take during the course of my business or the journey? And for each service or a product or a raw material or a whatever, there should be a separate code which should be informed to the vendor, so that when they send the invoice, that code is there. And then when the invoice is scanned, the optical character reader will read the vendor's name using the vendor code, the item or the services which are purchased by the item code, and automatically the accounting entry will be posted saying that security charges account debit to ABC to TDS payable. Now, how much TDS is payable? Again, the master will say whether it is a 194J professional fees and 10%, or it is a 194C contract, and whether it is a private company or a proprietorship and 2% or 1%. So all of those, the masters become very, very important. And then we come to this whole implementation of the OCR technology. But optical character reader technology can be implemented lot more, and it can be done in many places. And now there is something called as intelligent document processor as well. And we also have heard about robotic process automation, RPA. And RPA, there are a lot of use cases, lot more can be done. Let me come to in audit on the sampling.
Murtuza ji, sorry to interrupt. Can I have a question? Should I ask in the end?
I would suggest if we can, I'll stop, then take questions and then proceed ahead, because
sure.
Maybe there are some things which are covered in those slides. So what I'll do is I'll take this one slide, and after this there are some tools, and then I'll stop there. I'll take the questions, then we'll proceed ahead. Does that work well?
Yeah.
Okay, great. Thank you. So like as I was mentioning, friends, when most of the companies are also covered under, like if you are a subsidiary of a US headquartered company, SOX testing. In India, we have internal financial control and internal control reporting. Now, there is a guidelines by the CA Institute on internal financial control, where you need to take the samples. There is a guidelines for statutory audit, standard audit. There is a guidelines for internal audit, SIA. Every reconciliation, etc., then the minimum sample has to be 2 and the maximum sample can be 3. But if there is a daily recurring control, so like something like a purchase bill processing, a sale bill processing, a cash payment, a bank payment, etc., then all of those could be some of the guidance says that minimum 25 sample, maximum 40 sample. When we select these samples as per these guidelines, then we look at the whole process end to end, the compliance process, and we have detailed checklist that in terms of purchase requisition, purchase order, 3 quotations, comparative statement, etc., we check end to end. Okay, but there is so much of volume, and the volume going on increasing and compounding, and the data becoming too huge. I think there is a concern and the worry and also a thought process that the whole population also, at least on some aspects, could be checked, and that is where the whole analytics journey comes into place, where we can run the queries using some tools on various analytic platforms, and we can do a lot more. So that is where I would stop on the sampling and planning. Let me proceed ahead to the third one, the process mining. There are tools like Celonis, etc., and others, where the whole process end to end is reviewed on your ERP, irrespective of the volume, once you implement these tools. And it tells you that what should be your process as per documentation, what is the process being followed in each of these voucher or instances, and where the process is not being followed, those gaps come out. Okay. Similarly, voice analysis tools. Voice analysis tools are like, they are very much they are used in call centers, etc., where like a lot of calls are received. So if there are 2,000 agents sitting in a call center taking calls inbound or outbound, now if you have to listen into each and every call, then you will need 2,000 people to listen to all of them, which is not possible. And if 10, 20, 50 people need to do the audit of 2,000 people, then that means you'll need some support. And here are these tools which can listen to all the recorded calls, look for some alphabets or this thing where like someone has did not greet first, they did not say thank you at the end, they raise their volume beyond the limit, and X, Y, and Z, and on that basis the exceptions come out, and then you can really go to that particular agent or those particular calls, listen to them, and try to see what went wrong and try to resolve them. Similarly, I'll stop in exactly 3-4 minutes, and then I'll take few questions and then I'll proceed ahead. So when we talk about a virtual inspections mainly are drones. And these days, like say, one of the important concern for a lot of organization is in real estate construction, possibly, are the proper safety measures being taken? Okay. Someone was talking about in the IPO, Sandeep Ji was talking about Lodha. They make some huge towers. What if a worker falls down? The type of reputation risk it can bring to, and the whole company can come down and the share prices can be impacted. Can they take chance with security of the employees? The answer is no. And hence the drones can go and take photos of the guys who are working on the site to see whether they are wearing helmet or not, whether there's a proper shaft or not when they're coming down, and X and Y and Z, and those photos can be reviewed, and then accordingly action can be taken. Similarly, if there are large factories, in the factories, the management wants the workers to wear gumboots in the rainy season, normally helmets. Are they wearing it or not? While doing welding on the shop floor, they want a person to wear glasses and then do the welding, whether that is happening or not. So not only there, the drones are also being used now to go and see like where are the mines, what is the depth of it, what is the measurement inside, what type of material is there in the mines, etc., etc. So there are a lot of uses of this virtual inspection as well, and including the physical verification of stock. There are some organizations who started providing analytics as a service. That means you may not want to write queries and spend money on your hardware and software. You can just put the data into the folder. They will take all your purchase down. They will do various analytic queries for a fees, and they will give you all the exception reports for you. So that is where analytics as a service is also coming up. Coming to the last part of it, there are so many viewing solutions these days. The Power BI, the Tableau, and there are so many more. But there are like ready-made tools where they pick up data from your Excel table, they give you bars and charts. They also understand or read the last reports, and they can also write English in a report format and give it to you on the basis of some input that you give. And so report writing also has got support, and it has also become that much more easy now. So let me go to the next slide. And here are on all of these some illustrative tools. Okay, these are few. There could be a lot more. So on risk assessment side, if you look at the sampling or the analytics side, when you talk about analytics, it can start with a simple, and the best is Excel. Then you can go on to like ready-made tools like IDEA and Audit Command Language ACL. You can even go to like an R or SQL or a Python, and you can write queries on your own. Similarly, when you talk about the whole process walkthrough end to end, whether the whole purchase process is working properly, order to cash is working properly, you can use something like the Celonis or PathNow or Rockstar. If you want to do a lot of automation within your organization, you can use the RPA, and you can use automation anywhere, UiPath, Blue Prism, whatever. For presentation and disclosure and visualization, you can use Tableau and Power BI. So there are all of these which are available. With that, I will take this slide, and then I will stop and answer a couple of questions, and then maybe proceed ahead. I think the first important thing is, if I want to analyze the data, it is very, very important for an organization to see whether the data is properly captured, and hence the masters come into play. And when I say masters, we talk about the vendor master, the customer master, the supplier, the employee master, the bank master, and multiple of them. Now, if your vendor master is correct, if you know whether the vendor is a proprietor or private limited, accordingly the rate of TDS can be defined. If you captured your GST number of those vendors correctly, then maybe you will record the invoices, reconciliation will happen, and input credit you will get. If you have the bank accounts correctly captured, then you will be able to process the payment through electronic fund transfer or RTGS, because these days people don't do like keep on sitting and prepare checks now, right? So the transaction data are those daily transactions, the payment, the receipt, the X or Y. The masters are like all of these, and there are reference points, and the reference point could be an item code, a vendor code, an employee code, and to connect the tables and to make it easy. The sheer this thing is the volume. If you look at anything, whether you look at an Ola, you look at an Uber, you look at an Oyo, the volume, or even you look at a GeoMart, or you walk into any large departmental store and IKEA, the volume is huge. So the growth, then again, people access the same network sitting at multiple places across the globe. So distributed computing makes it a lot more difficult. Now the data people access into and put in a lot of stuff, but then again, the lot of stuff is accessed by a lot of, so information is shared at multiple places. There are so many integrated networks. There could be a mobile which logs into it. Today also on this call, there may be some people through computer, through a laptop, through a mobile, through this. Some are on the move, and someone is sitting in Delhi, and maybe someone is sitting in Mumbai, and everyone logs into it. So the integrated networks, and again, there are so many softwares and solutions, and all of these makes it a lot more complicated to comprehend what is happening and what is the best solution, and also to ensure that it is a very good and effective solution, so that it does not lead to maybe security risks. Okay, and two more things, and then before we go to this thing, we'll stop a little, take some questions here. The whole data size, continuous volume at which the data is getting generated in anything online through a virtual platform. Maybe so many people at this point in time are booking orders to Swiggy. So the volume of Swiggy, it is unimaginable. Okay, the type of orders. We can sit at home and now book tickets for a movie theater. So the type of data, there is a time where, like when I was maybe young or a child, I used to go to a retail store, a kirana store, to buy maybe wheat and rice and ghee and tail, and that is when I knew who was that uncle who was owning the store. Today, when I buy online, do I know who is the owner? The answer is no. Do they know who is the customer? Have they seen me ever? Only on the basis of my profile or whatever I do, they know me. So customers have not seen the vendors. Vendors have not seen it. Data is going on. Systems are working on it. And there is a lot more which is there. So there are two important things. One, the speed at which the disruption is happening, the changes are happening, the tools are coming in. And the second is, if organizations are resistant to change, then it will become really difficult. And hence, we also, as auditors, as CEOs, as CFOs, have to accept the change and ensure that we implement in our day-to-day life. So this was a little brief on this thing. We'll go into more details on data analytics first, then we'll go to continuous control monitoring. So here, let me stop, get a feel whether it is right, wrong, okay, whether the speed is okay, the volume is okay, and I can take a couple of questions as well.
Yeah, so Murtuza ji, I am really, we are enjoying this presentation. It gives a great insights about the disruptions which is going to come and take away the existing business if they are not innovative and ready to adopt the new technologies. I have one question over here. You have mentioned the automation of recording of the purchases or expenses with the help of OCR technology. So even though a big account it is, but they may have a small time vendors who may be giving a manual invoice, or the formats and the inks which are being used is different. They may be even still having typewritten invoices, or desk printer invoices there, or laser printer invoices there. So how the OCR is compatible in terms of capturing those details? If you can throw some insights on that.
So really excellent question, Mitesh ji. And so like what happened is, I was involved in setting up one large shared service center. And it was into like a business where they had operations in 23 circles in India. And so they moved into a shared service center at Ahmedabad. And then when the invoices started coming from Maharashtra and interior, they were the vendor's name, the letterhead was in Marathi. When it came from Gujarat, the letter it was in Gujarat and the return was also in Gujarat. And then same happened with Kannada and Tamil Nadu and X and Y.
Correct.
Now, either they had to employ people in Ahmedabad who will know Tamil language, Kannada language, etc., Malayalam, etc., and Gujarati and Marathi, and they could read and then they could pass the accounting entry. Or what the organization did is they said, okay, this is an A4 size invoice. You need to give me invoice in the standard format. Your invoice number should be here, date should be here, name of the company should be here, your letterhead should be here, your code should be here, item code should be here, XYZ, and the tax amount should be so and so. If you don't want to give the standard invoice, we will not work with you. Thank you very much. Now, of course, this was a large organization, so they could do that. And the vendors also wanted to work. So the vendor said, okay, I'll have my own bill book. I'll keep preparing in my bill book, but for giving it to them, I'll prepare in this standard format. Now, I'll just take 1 or 2 minutes, Mitesh, complete, and then maybe again, I am seeing you smiling, so I'll take your input further again. So now, when this invoices started coming to Ahmedabad from across India, then we needed only a clerk who will open the stapler pin and they will scan the invoice. The moment invoice was scanned, it will pick up, okay, like the vendor, on the basis of vendor code, the name of the vendor, on the basis of the item code, what is purchased, whether it is raw material, then purchase account debit to vendor, and to GST credit or VAT credit. If it was like, say, a service, then it would say security charges account debit to Mitesh to TDS payable and so and so. It would pick up all of those and the entries will be processed. When we started, it was really so much of difficulty, but today that organization, the invoice processing, 98.3% invoices are processed automatically. Now, what you mentioned is, like if the invoice while coming in courier is scrambled, then the OCR may not be able to read it, or there is an overwriting, or the ink fades, then the OCR may not be able to read it. Yes, that is true, but it will be a small percentage, and those type of invoices get stuck in their cockpit, as we call a suspense, where someone has to just go and then see and then punch them manually. So earlier, if they required 70 people to punch the purchase invoices, now they got only 5 people doing that job, and that too where it is stuck, but they spend a lot of time in reviewing what has been done by the system or by the OCR. Now, this was one. The second one was, of course, we had to capture everyone's bank detail, the IFSC code, a bank account number, etc., so that the payment can be done. Today, they are processing around 95% of the payment also online. And the moment, and I'll just complete this example also, so the benefit of everyone. So how do we implement this? See, the moment invoice is processed, from that day, it says like today it is punched in. So the credit period is calculated from that day. And if the master says 30 days, then from today 30 days will be calculated and the payment due date will be calculated automatically by the system. Now, they had some 650 bank account across India. So from all the bank account, every day the money comes into a common pool account. Then tomorrow night at 12 o'clock, how much is required to be processed to the vendor, that much will be transferred today from my pool account to the payment account. And a payment file will be generated, which will come to the process to the accounts payable team to see. If you want to blacklist a vendor because they're not given quality and you want to remove him from the payment list, that is different. Otherwise, you just say okay. And the moment you say okay, everything is fine. Tomorrow night, 12 o'clock, your account will be debited and the vendor's account will be credited and the payment will be made. So this is where they are. Now, they didn't stop there. This was happened 7 years back. Then they moved ahead and they said, like, kitna courier se invoices will come, how many people will staple and scan. So they moved into and they gave access to the vendors. Now the vendors can scan the invoices and directly upload, and those scanned invoices are read by the software, and automatically punching happens. So the whole courier business, opening a stapler, scanning it into a scanner, has stopped. And this is the whole journey of automation or digitalization with this large organization has gone through. So Mitesh, any other thing on this topic we can take and then we'll proceed ahead. Sorry.
No, that's it from my end. Anyone else if have any question?
So Murtuza ji, abhi आपको मालूम है, even in clearing, आपने, no, I have not a question I am asking.
Yes, sir.
That even in a banking, no, that all through the what you call CTS clearing,
yes,
RBI wants to transfer to various centers. So from all earlier was the important centers were covered. Now all India that will be through the scanning methodology. and with that clearing is taking place. So even in a clearing mechanism, there have been quite a lot of improvements. And similarly, I was about to tell you that this manual invoice and all currently nahi hai, sabko system se update hai, wo aapne bataya.
Right.
So that is the what you call changes. Similarly, आपने अभी 650 current account बताया था, or whatever account, bank account. Now you are aware that the Reserve Bank has issued guideline that those who are enjoying limits, they should have account only with the leader of the consortium, and all other current account will have to be closed. So banks must be introducing this system. With the result, pan India, one account and one transfer, and all that money will be available straight away here. And as you rightly said, today cash management system of the banks are so much advanced that the receivable management is thrown completely through the cash management technology of the earlier. Of course, Corporation Bank was the pioneer. Similarly, HDFC Bank, and now for all the foreign banks used to do through the Indian Bank. Now they are all together. So I can give one example. Long back, Maruti Suzuki, they used to give what model, what color, what which date, everything, at where it is sold, which dealer, and with the result, inventory, just in inventory. So they are, and the money, they know all that money coming, and they were managing the working capital very smoothly. So technology, as you rightly said, and of course your new area of risk management, all that, they are all going in the ecosystem. Things are getting better and better, and human resources are also becoming intelligent, and only limited people with the better volume management. Thank you.
Thank you, sir. So,
if I have the permission of the lead presenter, can I share a few thoughts on a very pertinent point raised in the slide?
please, sir, please.
Yeah. It was mentioned about whether you are going fast or slow or okay. What is observed, and it is all okay as long as you have ethics, integrity, and you are truthful. Everything is okay and nothing else will do. This is what Mr. Hemant Mehta told me repeatedly. Nothing else will do. There's a significance of the word nothing else will do. When he invited me to Mahindra Towers, and also in a gateway where his family was present, right in 1995 in connection of a private equity deal, then in case of certain large ADR investments, a percentage stake. Another point, in one of the slides, it was mentioned data is the new oil, right? Very important slide. The members of the board of the company have been in regular touch with me, including a few days back, and also people who participate in board meetings. In fact, they contributed a question late at night at 2 o'clock for a question for Mr. Anand Sinha, who addressed in his address, which has been mentioned by you in one of the slides, right? Data is the new oil. A company, O2C, and also other platforms, they have highly appreciated conclaves, webinars, summits going on continuously for decades, and on a digital medium, particularly on an accelerated mode during the pandemic. There is a humble suggestion by them, members of the board of the company. Data is the new oil, right? Growth is life. A strong suggestions, all the conclaves and summits must be free during pandemic. And that suggestion has been accepted in spite of limited resources. And another point is, you mentioned about in some of the slides about the Vivek Patra. Vivek Patra was conceptualized by a person who is a PhD. Somebody said CA is a singer or CA became a singer. That PhD incidentally is also a CA and also a ICAI, who is very well known to you in your territory. So that is it, and hopefully it will be done. Hopefully the Vivek Patra will get some subscriptions in due course. It's a digital story. Many suggestions are coming in of subscriptions. And lead presenter, I would suggest you contribute at least 200 slides of your knowledge and wisdom. Wisdom is essential, truthful wisdom in the Vivek Patra. And if you can help in getting subscriptions, nothing like it. Maybe some well-wishers will contribute. A decision has been taken. All conclaves will be free during pandemic. Suggestions of the board of the company, which calls itself data is a new oil, or O2C, or platforms and huge funds are coming. So that needs to be accepted, right? We cannot say you have to pay 3,000 rupees and then you get early bird discounts that some other people they are doing. Pandemic, very clear, that will come. Ethics, integrity, be truthful, unlimited time. You can give a call. A special webinar will be organized for you even at 11 p.m. Why? Because people in USA, they find the time more convenient to them. There are hundreds and thousands of members of professional bodies who would like to listen to the lead presentation by a person who has ethics, integrity, and truthful. Share with all your colleagues. Be ethical, have integrity, be truthful. That is our only expectation from you. Well done. Go ahead.
Thank you, sir. Thank you. So, since Mr. M. Narendra mentioned about the banking thing, Mitesh, I'll add one more example on your similar question which you had. So, like currently, sir, in like one of the bank in India, and I'm sure you must be knowing about that. So they have set up they are in the process, and they have started setting up a large shared service center at Gandhidham. And they are saying that why should a person go to any bank branch for a letter of credit or a bank guarantee? Because see, on the basis of my volume, on the basis of multiple things, my credit limit is decided. You know how much. Now I need to just put an online application, and in that center there, someone will process it, and the bank guarantee or letter of credit will come on mail to the customer, or it can even be couriered if there is a challenge. Now,
no, that is why, Murtuza, that entire centralization of Forex have been done by Punjab National Bank, State Bank of India, even my earlier corporation bank now, and even a small bank like Karnataka Bank. Now, as you rightly said, all the experienced staff will be available in the centralized pool. At the branch level, there will be marketing and other people. So, and as you rightly said, in the format he can do from his own office, and his export document also will be pushed through electronically, and the physical document will be collected by the courier, and that will be forwarded again by the centralized people. So it has reduced the time, and similarly the SWIFT is connected to the overall core, and with that remittances or whatever bill pay realization, all that is done online. So that is now actually the system of the client is connected to the bank core also in terms of the Forex business. Yeah, so, correctly.
Sir, this particular bank also, they are saying like all loan processing, like the department is coming up with a faceless assessment. They're saying all loan processing, no one needs to go to the branches. The financial statement, the collateral documents, everything will be scanned and uploaded, or they will be couriered to the shared service center, which is sitting somewhere in one corner of the country. And someone will look at all of those, and they will process the loan amounts, and the sanction letters will be issued on mail or online. So this is the type of movement. And here, correct, we are talking about going to the bank and talking about the bank branch audit, which we are doing year after year for 50 years. But now if nothing remains at the branch, what will I audit at the branch? So I'm saying that if the activities change, the audit will have to change, the work will reduce substantially at the branches, the number of people will come down, people will be at centralized locations more, there will be huge townships and huge offices, and it will be with a new skill set. We'll have to reskill ourselves with all of these tools and techniques.
Yeah, I should really appreciate the auditors during the COVID. In spite of all the difficulty, the management also cooperated of the corporates. I'm not talking bank, even in corporates, the entire virtually, including documentation checking, everything, the auditors have done the audit, and they are able to give, in spite of such a pressure by the regulatory compliance, they are able to complete. So as you said, in the time changing, the auditors are also living with, but at the same time, not with the lack of any knowledge or data or any chest check. All that can be made available through centralizedly mode. And so you have a lot of audit trail, audit checkup, and government is also regulating with that. I told the audit trail of the transaction, all that. So I think with your, even particularly you also, your knowledge, both the subject, CA, cost accountant and all, you are a role model for others. Like there are quite a lot. He said PhD and all. So all of this professional group, all of you have lived up to the expectation. So I should highly appreciate. Similarly, that YONO of the SBI, that they are also linking to everything. And now agriculture loan also, they are doing personal loan, vehicle loan, all through YONO and all online. So as the fintech as well as the bank, all of them are disrupting. And today they know that this type of COVID and other things, nobody will have time to come to the bank, and there is no need for bank. And accordingly, Bank of Baroda is saying 50% of the staff can be at my home. I don't need them to at the bank at all. So
Perfect.
all this disruption and changes are happening for good. Yeah, please.
Good.
Sorry.
So the new term is the faceless banking.
Yes, faceless banking. Correct.
Mitesh bhai, in some countries, there are no branches. There are only a screen on the street, and through the screen only all the transactions are happening. So the banking is evolved. But okay, coming to the presentation, I think it was really a very nice interaction. Mitesh, excellent, very good question. Narendra ji, thank you for sharing your inputs, and Manoj ji, thank you for sharing your inputs. What I would now request the organizers is, let me just finish my slides, and then towards the end again, depending on whatever time you say, I'll wait and take all the questions. Okay. So, see this particular slide, I want to show.
Can I say something? You are one of the organizers.
Yes,
The
sir.
clear platform clearly says everybody is organizer. There are 750 requests to be speakers. 750, and it has been decided everybody will be getting a Vivek Patra memento to keep behind their desk, and 750 mementos would be given. In spite of limited resources, Vivek Patra would be written in it, and you are one of the organizers.
Thank
The
you.
topics are selected by the participants themselves. There is no censorship, there is no filtering. Only censorship is about ethics, integrity, and be truthful. Only
Thank you.
criteria. Simple.
Thank you. Thank you. Thank you.
No filtering of questions. Anybody can put the video on and speak. No filtering, no misquoting.
Sure.
Simple.
Sure.
Be truthful, direct access.
So, see, when we come to this particular slide, now if we start from the left-hand side and go towards the right-hand side, see on the left-hand side, we are talking about the various platforms and the softwares. So like when we say GRC and the ERPs, it is like the SAP, the Oracle, the Tally, the Zoho, the whatever. Data is there in this system. Now, in many organizations, we see there is a customer relationship module, a CRM, there's a billing system, there is an order system. There are so many of these. So all this data is captured in various platforms on various hardware, software, and in different formats and different coding languages. Now, what do I need to extract? What do I need to analyze? That is very important question at the first stage. Now, accordingly, whether the data is of the right quality, etc., that happens in the next box. Then you can even run the process mining tool to see that what is the organization's documented process and whether that process is being followed or not. And if it is not followed, the gaps will come out. If the process is being followed, then it is good. Similarly, when you extract the data and when you write some queries and do some analytics, you will know like where what is going wrong. And in the next slides, I'll tell you what are the queries, what can go wrong by showing some examples. I'm just giving a high level first, then I move into the micro or a little lower. And then we go to the second last box where we do root causing and we do the presentation. And then we go into the final thing where we go to the this thing. So when we talk about this whole process, it is like ERP controls, it can be process mining, it can be scanning and digitalization and automation, it can be data analytics, it can be viewing solutions. All of these mixed together in each of the activity or process, it can really be, if it is employed in the right manner, give us the best and the most efficient way of doing the process or the business. Let me move ahead. Generally, I would, and we all request that like whenever an organization wants to do anything, even as an auditor, if I want to implement in my organization something, start slowly. Let it not go all data analytics. Okay, let us start with one process, procure to pay, then order to cash, then this, then that. Let us identify which tools are correct. Let us identify how much we want to invest. Let us also do a return on investment analysis. Okay, like, okay, if I do this, how will it help me? How will it become more efficient? What will I save? So various of these are there, but of course, yes, the highest level of management, the board, audit committee, CEO, CFO will have to give their vetting, their approval, and they will have to give the support, because it also means change management. And change management is the changing of mindset along with the ways of doing work, and hence a lot of support and a lot of discussions and communication is also very, very important. Let me move ahead a little. So I have taken one simple thing, which is procure to pay. In the first set, I'll talk about auditor's angle and from the process angle, what are the queries, what can go wrong, what happens, and then we will go ahead and we'll also talk about continuous control monitoring. Okay. Friends, this is a whole end-to-end procure to pay process we all know. On one side, it is about the supplier, the vendor, identification. First, the procurement team should know what I'm going to purchase. Then for each purchase, I need more than one vendor. Then identifying those vendor, getting the documents, doing their vendor registration, and making it ready so that whenever I want to place an order, they're available. So that is the whole piece on the left-hand side. On the right-hand side, I will also do the evaluation after they've given me the material or the service, whether right, wrong, etc. or not. I'll do the blacklisting, evaluation, scoring, whatever it is. And if I'm doing a lot of purchases from a particular vendor, then I'll do quantity discount X, Y, and Z. Similarly, in between comes the whole thing where, like, once who raises a purchase request, then purchase request maker checker controls. Someone is making it, someone is approving it, whether it is as per budget or not, and whether it is as per the plan, the production plan, the purchase plan, the sales plan, etc. or not. Then comes the procurement team, where they really raise the purchase order. And again, there is a maker and checker control. Then comes the receiving of material. And the material is received, the first step is quality check or the receiving of the service in the SAP or ERP. So the material or the quantity is received. Second, so quality, then at the time of goods received, know the quantity. And once all of those is done, then the invoice comes. Now, does the invoice need to come to the finance? Does the invoice need to come to warehouse? Does the invoice need to come to X or Y? It should be directly sent to the accounts payable team, and then they can either scan or do the entry. And then the ERP can do a three-way matching, and then accordingly the invoices will be processed and the payment will be made. This is the whole procure to pay process. Let me go ahead a little more into detail. 1, 2, 3, 4. If you go into this, this is like all break up into each one. So the first, sales planning, forecast planning, then accordingly the production plan, then the purchase plan, that is on the left hand side. As you go ahead, the whole evaluation or making of control, putting the clauses X, Y, Z. Then you go ahead, then you go ahead, then you go ahead, and there is a whole process end to end. This is only the procurement. But be it issuing a bank guarantee, there has to be a process. Be it issuing a letter of credit, there is this thing. Issuing an insurance policy, there is a whole process which starts from identifying a customer, touching base, getting the KYC, doing the policy, doing the documentation till the end it is delivered, and whatever premium is received again and again. So everything is a whole process. In those processes, small sub processes, each activity level, and in that activity, then how do you do it right? What is the risk? What can go wrong? So let me just touch upon the whole procurement. In procurement or in a manufacturing company, if multiple vendors have got the same bank account, is it a problem? The answer is yes. As a CFO, as a management, as an auditor, statutory or internal, how do I check manually? Either I take the bank account detail and then put Control F and go into an Excel and keep on searching, or I write a query, that same bank account with 2 vendors, and tuck, the moment I press a button, it comes out. Same GST number, 2 vendors, it will come out. For a particular product, if there are 3 vendors and each one has got a different rate, then the rate comparison can be done, and the system can tell you, like, okay, when you are raising a purchase order on a particular vendor, whether he is the lowest or whether it is higher than someone else, and hence you can go and check. There is no harm in giving it to someone who is a little more because of whatever other reasons, and there could be a purchase committee and evaluation, etc. But the queries could be multiple. What if the company's warehouse closes at 8 in the evening and you find that someone has issued material at 11 in the night? How will you check manually? So here, when you write a query, anything after office hours will be picked up. And we all know it is mentioned in the Income Tax Act also, if cash payment is made on a Sunday or a holiday, it is disallowed. How do you know whether something is done on a Sunday or a holiday? Again, you can write a query. So you can keep on thinking and writing queries after queries, queries after queries. And by doing that, if you just run the buttons, you will get all the exceptions. Then you can only evaluate that exception to see whether they are correct or wrong, or something is going wrong, then correct that. And that is how you will be able to cover all the activities, all the processes, and you will be in a way trying to ensure that like nothing really wrong is happening somewhere in the organization. That is how the whole process can be, like the whole data analytics can be implemented. So any industry, any processes, I would say first list out all activities, list out the processes, sub processes, and then see what is happening where, and then accordingly see what queries can be written. Okay. Here, I can even for procure to pay bucket them into various things. Trend analysis, fraud indicator. Fraud indicator is assuming there is one security payment every month, and in a particular month there are two payments to a security agency. Is there a duplicate payment against the same bill? Every month if the same amount is paid, then like 12 months 12 entries should be there. Are there more? So there are these type of queries also which will tell you duplicate payments, suspicion payment dates. There are some algorithm whereby 9 or 7 or is picked up, and accordingly you can also come up with like saying like what is happening. Now if there are a lot of transactions happening with the same vendor, so huge purchases from a vendor, whether that vendor is a relative of someone, whether proper rates are negotiated, whether you get right type of price and the discount. Similarly, whether an employee or employee's relative is a vendor or not, you can take both the dump of the name with the surname, etc., PAN card, etc., and you can do a fuzzy logic, and it can also throw off some suspicion in between the vendor and the listing the names. We all know open purchase orders, PO analysis. Okay, so there are so many of these which can come up. Just trying to open our eyes and ears to saying what type of queries can be written. Okay, now once you have the analytics and you have multiple warehouses, you can map. In a pharma company there are 10, 20, 30 warehouses. So which item, how much stock, aging can be done. Okay, X, Y, Z, petty cash, how much it is, how much you utilize, what type of expenses, factory by factory, location by location, depot by depot, sales office wise. If the data is properly captured in ERP, and if the queries are written, like what needs to be compared, what is the benchmark, you can compare one with another and you can know like where what is going wrong. Let me move ahead. So like in this part, and I'll stop in the evening, in the end again, and take a lot of questions, queries, whatever you have. In this part, I wanted to cover from a statutory auditor's angle and an internal audit angle, what queries are required to be written. But once I've written the queries, as an internal auditor, I will maybe come once in 3 years or once in a year or once in 2 years to come and do the procure to pay audit. Next year, I'll do bank audit. Third year, I'll do something else. Next year, I'll do something else. There are so many activities in a company to do the audit. So in the second year, if I don't do the audit, does it mean no one checks it? So the answer is no. I write the queries and I can hand over to the finance function or to the operations team, and they can start running the queries on a regular basis, weekly, monthly, whatever. And if they get exception, they can keep on correcting. So that is where like the concept of 3 line of defense. The first is the operating team, the user himself, the maker. He has to follow a particular process and do it in the right manner. So he has to take the first care. Then there is a checker, his boss or someone. That is also a first line of defense. The boss has to see whether the transactions are correctly done or not. Then there is a second line of defense, which is a risk management team or someone, or a compliance team or whatever, who will do the review. And then comes the third line of defense, which is the internal auditor. And the external auditor just comes once in a year and does the financial statement. So that is where like we try to build it into the first line. Now, when we talk about continuous control monitoring, friends, what happens is lot of organizations use this in even using it for increasing the sales, etc. And let me tell you one, like say a particular game is being sold by a particular company, and the games are most likely to be used by children of 10 years of age, then how do you send the message to whom? Okay. Similarly, see, when I go to a, like say, if I go for a particular type of restaurants to eat food, and if I go to a restaurant once in a month, then the system, the public domain has got that knowledge that at least once in a month I go to a restaurant. If I see a movie like twice a month, that is captured. And if I see all Shah Rukh Khan movies, that is captured. If I buy Nike shoes, it is captured. If I buy an Arrow shirt, it is captured. So whatever actions we do, those are captured in the public domain. Now, that is where is the data first. Now, one large organization, telecom company, because telecom revenues were going down, they appointed a consultant, and I'll give you two examples and then move ahead. So this telecom company appointed a consultant to find out how the revenue can be increased. And in that particular country, I as a customer, if I go using my mobile to the Google and search for a sports shoes, then I don't buy it. But then after 2 days, when I go into a parking mall, and the moment I enter the parking mall and park my car, I get a message on my mobile saying that sports shoe shop is 203 on the second floor of B Wing. That means what? When I went to that Twitter or public domain or Google or Facebook or LinkedIn or whatever, and I tried to do something and I was searching for a movie or a shirt or a shoes or a X or Y, what I wanted to buy or what was my interest was captured. Wherever it is getting sold, if I get into that area, it will send me a push message. So on the basis of data, what is the insight? On the basis of insight, you take a decision that whom to push. On the basis, the moment you push that, then I will be tempted to go to that shop and see. If I go to the shop and see, and if I like and I buy, then it will become a value unlock because I will buy, the revenue will increase, the shopkeeper will earn, he will give a commission to the telecom company will earn. So this is a whole process of analytics as a value which can be implemented in sales, in marketing, in customer care, in everything that you do. And it can increase the efficiency, increase the coverage, it can increase the reach, it can increase the revenue. Friends, there were various stages. Earlier, descriptive, what happened. After happening, we used to analyze. Then we said diagnostic, why did it happen? Okay, and try to correct. Then we went to a stage, what will happen? Predictive collection analysis. And in insurance companies, basis, if my premium due date is on the 10th of April, I get the mail on 1st of April through the trigger system. And I am a person who pays on 2nd of April. And I have never delayed beyond 3rd in my quarterly premium payment. Then on the basis of my pattern, it calculates that the premium will come either on 2nd or 3rd. And if there are 25,000 customers or there are 25 lakh customers, when are the due dates? When does the message go? And within how many days do they pay? And how many customers make delayed payment? On that basis, the predictive collection analysis is done by the systems and the softwares now, saying that on so and so date, so much money will come into your bank account. And now the organizations have moved to the next stage, which is prescriptive analysis. So like, what will happen next? iPhone ke baad, which iPhone model, who will buy, how much should be the pricing, and what I should manufacture. So looking into the future, that is where the analytics game is going. Some analytic tools again for continuous control monitoring.
Yes.
Only a few minutes. And so when we talk about a continuous control monitoring, what is important? The various stages. First, looking at the organization and seeing the maturity assessment. What is the hardware? What is the software? What are the tools? Are the people ready, etc.? Then looking at what needs to be done. Then setting up the whole system. Then doing the right type of tool and doing the coding, etc. After the coding, who should get the report? How they should get the report? What should be the visualization layer? Whether the report should come on mail or on WhatsApp or on a computer or on a software or a mobile, and then what type and to whom? All of those. And then maybe the policies and procedures to handle this, and then hand over and to the management and move it if you are a consultant and you are helping them. Okay. So this is the whole developing a sustainable continuous control monitoring platform. Then you move from there to managed analytics, where you hand it over and
With
it
your
keeps on
permission,
running.
can I say something?
Manojji, give me 2-3 minutes.
Sure, sure. And Mitesh is also waiting.
Yeah,
And
yeah,
one
yeah.
of the slides I would like to add my views with your permission.
Then exactly in 2 to 3 minutes, I'm stopping.
Done.
So yes. So
Yeah.
like when I talk about managed analytics, then it keeps on running because now it is implemented. Then we are also talking about analytics driven internal audit or statutory audit, where the queries are written and like your team goes from one client to another on procure to pay. They see what data is required, pull out the data in those particular column, run the query, they get the exception report, they start doing the work. And you can even integrate audit into the day-to-day processes. So like I'll share the slides and you can look through those. Now, last slide. As an organization, when I'm setting up something, okay, a continuous control monitoring or whatever, what do I want to capture? Only the data from my ERP, accounting software, from my CRM, from my billing software? Do I go to public domain like a Google and X and Y and get from the data from outside? So that is the lowest level from where the data is required to be captured. Then how the data will be pulled? What are the data pulling engines? Once the data is pulled, where is it stored? Is it a data warehouse? Is it a hardware, cloud, software, wherever it is? Once the data comes in, then you run the analytic queries. What type of analytic? Whether you'll use R, SQL, etc., etc. Once all of this is done, then the reporting layer. What do you want to report, in which format, to whom, and what solutions you want to use for reporting, and whether it is a financial risk, operation risk, technology risk, compliance risk, whatever it is, and to whom, to a VP finance, to a compliance head, to a forensic head, to a X and Y. So this is the whole sustainable journey of setting up from down to above, and that is the end state. Now, only when you implement the analytics in procure to pay, what type of queries? Looking at the sequence gap in the purchase order, if there is a gap, okay, X, Y, Z, difference between the payment and the bill, there could be small dollar which is not paid, average payment due date, X and Y. There could be various reports which could be done through a Tableau or a Power BI, where you can show country by country reporting, you can show country year by year, you can show quarter by quarter, you can show various graphs. There could be various dashboards like duplicate payments, the same bank account with multiple vendors and X and Y. There could be lots of graphs, charts, tables, if the data is properly captured and analyzed. So the thing is, are we ready to face the future with confidence? And if yes, we need to increase our pace and start catching up with the world where it is going. Thank you.
With your permission, if possible, can I share a few thoughts on slides before
Before that,
Mitesh gets ready with this presentation?
Yes, before that, Manoj, I'll take only 1 minute to really thank Mitesh for allowing me to finish my presentation first, because I had to go for some other appointment. Mitesh ji, really thank you very much, Mitesh ji. Thanks a lot.
It's mutual. Can you take out the slides on value creation?
Value creation.
Assurance to value creation. You are given a guarantee. Yeah, before escalating. First is you are giving assurance, then you want to escalate, right? You are in a very mood to escalate. India growth story. It is like the Prime Minister said, we have to achieve the target of being #1 GDP in the world as soon as possible. We need not wait till 2050. Even $5 trillion GDP, we need not wait till 2026. Yeah, on this slide. Are you there?
एक मिनट में इधर मैं आपको करता हूँ फोन यार. हाँ, yes, I am here.
Yeah, with your video on. Now, yes. I can just share my thoughts. Each slide, I have seen the way it is. We can have a half an hour discussion on it. Each slide, and this is one slide. In fact, if you are ready, whether today or any time, you have unlimited time, 1 month, 2 months, 1 year, 2 years. We could have a discussion on this slide in a physical meeting. We have an offer of 800 participants auditorium in a city site, but now the heart is shifting to BKC. If you can arrange, or somebody else can arrange, we could have a discussion on this for half an hour in a physical meeting in an auditorium with me and you together, and I give a challenge, because every auditor, they feel they are parasites. There are institutes dedicated to this profession, but they feel it's a staff role. You have given an assurance to value creation. Data is a new oil, value creation, right? And I would share my experience in 1985, after topping in professional bodies examination. I personally went to Faizabad, Shahjahanpur, where rakes of fertilizer were getting unloaded. Operational audit, it was a new concept in those days, and management and operational audit was a very challenging subject in exam of a professional body. So, and also in an engineering firm where the board of directors is so eminent, they are counted among the top 10 renowned people in the world. On value creation, that was management and operational audit in 1985, where in fact I was part of a report where action taken report was necessary for the operating manager, a CXO who has a P&L responsibility. But most of the people in that audit profession feels they are staff roles, they are a cost center. And you are saying it's not a cost center, it is value creation, right? And now can we come to the next slide and Mitesh can come. And you can stay on and come back after Mitesh. There is a second one, value escalator.
So,
Yeah, this is it. Now you're not talking about value creation, you're talking about value escalator, which says you are a part of India growth story, and then you will be the fastest in reaching the target set up by the Prime Minister's office, right?
yes.
It will be very difficult for you to convince me. Are you ready for the challenge? You tell me South Bombay or BKC? And who will arrange? I am ready tonight and tomorrow, in spite of health concerns. I'm not supposed to speak much. I'm wearing a t-shirt for reasons known to you. But I am ready the moment you are ready. But you have to be truthful. Real life example we'll share. In a positive way, no negatives.
Yes.
Ethics, integrity, be truthful. Hats off to you. And with your permission, you yourself invite as organizer, the next presenter, and any other participants who have been waiting to speak. It's a summit which can go on till as long as you want. And you can also join from the car. You can join from another city or branch you are going. You are known as a participant and a member of not only the firm you mentioned as a managing partner, but also you are actually interacting in so many professional bodies which you have shared in your, I think the first given cover slides, right? And pass the message on wherever you go. Ethics, integrity, be truthful. That is the only criteria.
Thank you, Manojji. Thank you for your thought. And with that, I've already taken a lot more time.
Yeah.
So
Murtuza,
invite Mitesh.
One minute, Murtuza, this predictive analysis, that is very important. And I think I saw it's a Garner presentation. We must be having analytical tool. Today, how a mid-corporate or corporate will perform in terms of debt servicing, and what is the internal data of the what you call to arrive at the rate of default or probability of default, and also the loss given default and all types of ratio for our Basel III and all that. So this particular and the prescriptive, that what you are both all of this, then I can see this particular slide is very important, and I think there is a very good value for the banks, and banks have already started, and NBFCs also. So I think this particular slide also, as Manoj just said, some more what are the analytics are available, what can be done, and we can have some financial bankers and practitioners, and including Garner people could be called, and we can have along with you some 1 hour, 2 hours discussion on this. This is also very important.
And lastly, from the lead presenter, I would like to know from you very clearly, a honest, truthful answer. Have you ever participated in a better lead presentation and a discussion in your life? And if yes, give me the date and the time, and I would like to see evidence of that. Yes or no is answer with evidence.
See, Manojji, this was a good forum where there is a lot of interaction. So I think the number of participants does not matter till the time everyone is ready to learn and interact with each other. And I think I also really loved the interaction by every one of us here. So I
Number
think,
of participants matter. You will be circulating in your own LinkedIn and Facebook. So you will be getting millions of participants. Can you ensure every student contributes one slide to the Vivek Patra? Every member in industry of any committee you are involved in can contribute one slide to the Vivek Patra. You have promised 200 slides. If you can do it, that is your success. You will be measured by that criteria.
I
Get one
can,
slide from every student and one slide from every member whom you meet from today onwards.
I can give my guarantee how much I can contribute, and I can request others, but I
Right,
cannot
do
guarantee.
that, do that. Hats off to you. Wonderful insight.
Thank you. Thank you.
Ethics, integrity, be truthful. Only criteria.
Thank you. Thank you.
Murtuza
With
ji,
that,
when we have a second round, I would like you to cover, based on your practical experience, the pros and cons of Power BI vis-a-vis Tableau.
sure, we can do that.
Yeah.
So with that, Mitesh ji, I welcome you. And so like, yes, you can
Yeah.
please start your presentation. I have stopped the
Sure.
sharing. Yes,
Sure,
thank you.
sure.
Thank you for inviting me here today and
Thank
having
you.
a patient.
Give a few questions to Mitesh, a tough question.
No, so I already have put up one question to him, which we'll take up next time. Even he is watching his watch, so I felt let us take it next time.
Perfect.
Everyone can see the slides?
Yes, we can.
Yeah, yeah. One sec, I'll just see. Is it coming a Max the slideshow version or how it is? So good afternoon, everyone.
Abhi aa gaye.
Yeah. Thank you.
Yeah.
So we are having this presentation on the self-redevelopment. We have seen the last quarter, especially in Mumbai, with the reduction in the stamp duty, there was a significant sale of the flats which is happening. At the same point of time, even the old buildings which are quite dilapidated are still not moving ahead because of its own traditional challenges, the trust deficit which they have with the builder community, or even there are some loopholes in the Rera which is not taking care of the interest of the existing members. And the erstwhile state government has helped to devise a product and got it up vetted from the RBI as well. And the product name is called as self redevelopment, where the only bank which was given this product to sell was MDCC Bank, which is called as Mumbai District Central Cooperative Bank. So this is little bit about the history of the self-redevelopment product. And when MDCC Bank started, they had the funds to the tune of 200 CR which were parked for this product, and it got exhausted very quickly in just 4 or 5 projects. Then they went to the foreign banks to get at a cheaper loan, and they were back in the business. But all of a sudden RBI banned them somewhere in the middle of the last year because of some issues. But the recent development is the RBI has allowed even the NBFCs, venture capital, housing finance companies to be there in this race. And currently, even the SBI is in talks and they are framing the policies to come up with this. The reason why nationalized bank or private bank was not in this space, it's not because the RBI is not allowing them, but there is a one condition that there has to be some collateral which has to be given by the borrower to the lender. And as a housing society, they always have a challenge in terms of what collateral and how they can provide it. So these are two publications which has come in the newspaper, where one talks about housing finance company is being given the permission by the RBI. So HDFC's leader who is there in this HFC space, or even India Bull Housing Finance, they are in the midst of framing the policy to get it rolled out as a product. I'll cover the second article in my subsequent slide. The rules of the game for the self-redevelopment. There are 3 developers from the Rera perspective. One is a society itself, second is a lender, and third is a project management consultant or a contractor based on how they devise the scheme. The appointment power of various sub agencies, maybe it is an architect, developers, RCC consultant, or buying of the materials, cement, concrete mix, whatever. It vests with the society, and how it flows is like PMC helps them in shortlisting the top 3 or top 5 vendors, whatever they have internally decided after floating the RFQ, and they give their recommendations. Society finally selects that particular vendor to go ahead with the development activity. And when we say society, it's basically the redevelopment committee or core committee who works on this, and they jointly work with the project management consultant. There is the regular weekly meeting in terms of what all progress of the work is happening with the redevelopment committee by the PMC, and maybe a monthly or quarterly the timelines are being set with the all the society members in general to show where what the progress stands in. Usually there are the challenges with the society members that we are not having a expertise. We may get caught in Rera or maybe some non-compliance under any of the law. Maybe it is a GST or income tax or environmental norms. So if they are very clean and clear, they are ethical, they have followed all the processes and procedures, then insurance company also give the first party claim. Such liability policies are also there by specific insurance company who expertise in the liability insurance. So the office bearers of the society interest gets protected. Next is the how this mechanism works. So lenders lend this money against the plot of the project because there has to be some security apart from the collateral. And currently the old structure is still in existence. The new structure has not come up. So the plot is there which gets mortgaged. Here I am largely covering the plots which are getting captured under the private land, because even self-redevelopment happens in the government-owned land or MADA-owned land as well. But then there are some different rules for them. More concessions are being provided. So I am talking more from the private land owner's perspective. And once the building gets constructed, the charge gets transferred to the sellable flats and the land becomes free. How the payments happen during the course of the construction of the project. So all payments are being pre-approved. There is a auditor which is independent agency appointed by the bank and who are empaneled with them, and they releases this all payments. They go through the policies in terms of whether the vendor any favorism has been given, they have followed the procedures, material has been received, quality check has been done. So that standard protocol the auditor ensures, post which they give their pre-approval and bank disperses this payment. Collection also comes in the same escrow account from which the loan has been sanctioned. Society can take whatever form the members agree as far as selling of the flats are concerned, whether they want to opt for e-commerce site like 99 acres, Magic Bricks and so on, housing.com, or maybe they appoint a sole selling agents or a traditional broker, whatever society agree in their EGMs. And pricing can be decided accordingly. Ideally, it gets factored in the feasibility report itself, but with a caveat of 5 to 10% deviation, whatever society wants to allow from the commercial interest perspective. The existing members on an emergency can sell their flat even if they wish to opt so, because usually they have the hindrance. If I want to sell my flat and I am also one of the co-lenders as a part of the society, but the scheme doesn't stop them to sell their flats. If they have emergency or if the person job is getting relocated and he wants to relocate to the different city, he can easily sell his flat and can move on. the loan which is given, so if it's a 100 CR project, for example, the 15 CR is usually coming from the society as a collateral and 85 CR is being given by the lenders. Now this norm again will undergo a change based on the what is the risk appetite of the HFC or VC funds or even the SBI or other PSU banks coming up. And currently, the scheme as per MDCCB, it is like they allow the project to get completed within 3 years from the date it is approved. The maximum cap per se is not defined, but what I understand based on my experience, they are restricting it up to 50 crore. And this has to be payable in a span of 10 years. Giving a slide on the comparative for the self-redevelopment versus the traditional builder-based development. So what happens if the builder fails to pay the rent or corpus to the members? There is no remedy defined under the Rera because Rera covers only the new members who are there. Practically speaking, there is no remedy for the existing members. What happens if there is a delay in completion of the project? So the possibility is very, very remote unless and until such exceptional situation which we are currently passing through, like COVID-19 comes in. Because society himself is a developer, they have full control over the funds. There is no previous history of any non-compliance, maybe on the RERA or any other statute. But if there is a delay, again, the existing members doesn't have can approach to the court under Maharera as well. What about if any non-compliance by the builder in this particular project or may have any other non-compliances? Again, there is no remedy, but in the self-redevelopment, yes, society's consultant PMC will be looking on this aspect very meticulously. So there is very less possibility of non-compliance because they themselves will be filing the GST returns or TDS returns in time or environmental norm compliances. Or even to that extent, we usually see that whatever FSI was allowed, the builder has consumed more FSI and therefore OC was not granted. So such incidents will not be happening. They will be constructing the society will be constructing the building to the extent what FSI is available to them. Security of the project, there is full security of this project because society has full control of the funds. Usually what happens in the traditional redevelopment mode, the builder gives some 10% of the project cost as a bank guarantee. This is the maximum they give because 10% bank guarantee, they have to invest the entire 10% of that value with the bank. It is not like a non-fund based bank limits. So their hardcore fund is getting blocked and they are, as a businessman, they are counting on their interest as a notional cost over there. So that is one key challenge over there. Advantages, first of all, to the members, existing and the new. There is a timely completion. So even the new members who is booking his flat when the building is under construction has full security that even the existing members are bound to come back to stay in the flat. So there is no possibility of the project getting delayed. Quality is bound to come very superior as compared to the traditional based because the material and all which is going to get used is obviously of the higher grade. I'm comparing this with the average redevelopment, not with the very cream projects. Cost of construction. So if we slice down the cost, maybe the interest cost, it gets subsidized by 4%. There is a single window clearance scheme which is made available for the self-redevelopment where substantial amount of clearance get cleared under single window. They don't have to go again and again. There is an additional FSI which society gets, that is over and above 10% of the standard FSI as per the development credit control rules. North Bombay usually doesn't have the FSI, they need to buy the TDRs. So over there also they get the 50% concession. Even the existing members, if they want to buy the additional area, there is a flat concession on the stamp duty of 1,000 rupees. And whatever left out is that members can get in the form of profit as well, apart from corpus or rent, even if I benchmark the corpus and rent with the existing builder. From the lender's perspective, the advantage is the very minimal risk of bad debts or account becoming an NPA. And even if the society is not able to repay, under Surface Act, still there is a charge which continues on the society and it needs to be repaid. For government, it is overall good for the economy, as builders have to really improve their score on the compliance and even to have the effective pricing as well. We observed in the previous presentation by Sandeep Bhat in the LODA, the initial anchor investors were largely the FIIs. So whatever profit is there, that gets usually shared with them. So overall, the money even remains back in the country. Limitations for the self-redevelopment. Members are willing to trust the external agency, that is the builder, but not have the trust with the own members of the redevelopment committee. There is a very high level of trust deficit. Even the small things which keeps on happening, they need to have a wider mindset and they need to understand that this is part of the overall budget. Looking at the industry, there are good amount of expenses which has to be managed, and PMC helps us to regularize such expenses, and there should not be such questions asked, and it has to be accepted as the part of such costs, the real estate projects. And there has to be enthusiasm which has to be there on with the redevelopment committee.
I think,
yeah.
Mitesh, this is Prakash here.
Yeah.
I think this first point, what you said, no, first and second point, I think that is something stopping redevelopment time. So this is a main thing. Because I know many societies where they want to do redevelopment, but because of there is no agreement there, everybody is not coming on the common ground.
Yeah.
Things are not.
Yeah, they feel that there is certainly hidden interest on that.
Right. So what is happening? The old generation, say people who are a pensioner or retired people, they don't want to spend money, and the new generation want to have the bigger house, so they are ready to spend money and go for the view. So this is one of the point where I'm saying that there is an issue. So what is your experience on this part, and how many people are able to say out of 100 people who society who go for redevelopment, what is the success ratio? Strike rate kya hai iska?
So currently the strike rate is very low, but now HFC coming in, RBI giving them the permission, they will, you can understand the skill sets between the MDCC bank, with all due respects to every banker vis-a-vis the HFCs. And the private sector coming in, they can twist the bands to the desire of not only their business, but in the overall interest as well, which benefits it.
Just one more thing. Oh, sorry,
yeah.
please. Sorry,
if there is a mandatory condition of 15% collateral, okay, I share you my own experience where MDCC bank said, okay, we have a IOD. So IOD, we can replace this with the 15% collaterals, because sizable amount of expenditure gets incurred till the IOD comes in. You need to have a DA signed in, stamp duty to be paid in. There is a sizable amount of stamp duty which goes in. It runs in crores. It's for the entire project.
Right.
So
those society who don't have their own conveyance, I mean,
now the deemed conveyance is there in place, and there are agencies, the project management consultant agencies, who can help them to regularize all the small things, even the property card. There is a lot of challenge. If it is a even alphabetical error in the name, we need to get the property card corrected, and huge cost is getting involved in such corrections.
But you know, many in Kalbadevi area or maybe South Bombay area, there are people who are a tenant and they just have a tenancy right.
Right.
So in this, that kind of cases, self-redevelopment is not possible, right? Because their owner will never agree. Makan Malik agree nahi karega kabhi.
See, now if you see the MOFA Act, which has come up, okay, and this deemed conveyance and the tenancy law, if you put all the three together and read holistically, C ward which you mentioned, the Kalbadevi area, Girgam area, it's entirely the tenant based. It is going in a massive way for the redevelopment. As far as self redevelopment is concerned, if you show him the scheme of the commercial interest which lies in that, it definitely comes in, because the tenants who are staying over there since ages are also now the equal owners of that place. So one has to go to for a legal fight to say him ki, okay, the tenants have equal rights, the building has been quite dilapidated. If the landlord is not agreeing, tenants are moving ahead. There is another challenge in the self redevelopment is the bank asks for the 100% consent. Okay, unlike the other traditional redevelopment where even 51% consent, the court has said you can still move ahead. But still here practically we have to pursue and get agreeing to the non-agreeing members as well as the lenders that there are no real grounds for. You have mentioned rightly the senior citizens, their children might be residing overseas, they don't require a land and they have the mental block, what happens if my building doesn't turn up? So they may not agree for the redevelopment, but we need to move ahead and make them convince, or else you have to opt for the legal remedies for that. But it's not that because of that your redevelopment gets stalled.
Mitesh, there's one question from me, which
Yes.
even before you actually start the activity where the PMC actually does everything, the whole idea of redevelopment or self-development, whichever is the case, there is a hidden cost which is involved.
Correct.
And that is something which is quite huge.
Yeah.
And in particular, what this cooperative bank used to do. In fact, I had interacted with them myself, and they had said that they would be able to, in the overall scheme of things, in the loan which they are sanctioning, they would consider that cost as a thing which is relevant.
Yeah,
now,
absolutely.
Now I don't know whether the HFCs will look at it that way, because the
They
HFCs
also will be, see, practical aspect, they will also be factoring it. HFCs are more aware of this business because they were also initially funding the projects to the developers. So they know today whosoever developer is there, we see that that project is funded by X bank or Y bank. They are very much aware about this. The industry is such.
Oh, I hope you understood what I mean by
Yeah,
hidden cost. Even before the
I'm
project
aware.
starts.
So that is what I'm saying.
For the approvals.
Yeah. So for all the approvals, okay, you keep a board tomorrow. The people will be there in front of your gate, whosoever, whether it is X builder or it is X society. That we need our share, and those costs are all managed. And there are licensing agencies also which are there in this game who help us, and they regularize every expenses.
Yeah, that's right.
Yeah, greasing is needed in the car. You can understand.
Right.
Absolutely.
Yeah, and that is being shown to the members, and there is some jackup also which has been built in that. Okay. So the members needs to have a trust, and they need to say, okay, even if a higher side, if this is the maximum amount, but still the first and important thing is they are getting the building, their house back in time. Second thing is there is no remedy in Rera if they are going under the traditional builder. And the third thing, if there is anything surplus left out in the kitty, that is going to come back to them as well. Fourth
Yeah,
is
Mitesh.
quality of the construction for sure. Yeah.
Yeah, Mitesh, one question you mentioned about this LODA, these anchor investors. You said that, they have applied and the surplus will be shared by them. Can you little explain more on that, how the surplus can go to them?
See, anchor investors, obviously, when they come in, the objective is to have the exit within the defined timeline, and the issue has to get successful with whatever the listing price, the valuation they want. So the reason why anchor investor coming just before the IPO is basically this only, so that the investors' confidence level gets increased, because such good amount of anchor investors are there in place. It is not only for LODA, I'm saying for any industry. Why
No, the
they?
point, yeah, I understand that. The point is you said that they will be sharing that profits and all, but that goes to the company, right?
So those companies are all FIIs, right? CDPQ or Brookfield and all. If they are investing 100 CR, okay, and in a short span they are making, with the help of valuation game, 150 CR, that 50 CR is going to them.
So if it is like Brookfield or some kind of a
Any foreign investor institutions, I'm saying.
Okay.
So in between, I was discussing, one of the member told me now that there is no need to give the security even for the land. They will take the sellable flats as a security. So I told the gentleman that, see, loan is given today. Okay, what is in existence in today is, if today society fails in, it is only the land. So bank will certainly require some form of security which is in existence, and that has to be land. And even in the traditional business development, if you have got a chance to go through the DA, the builders are also securing the same land to the lenders. And we are getting a security as a member only just 10% of that bank guarantee, in the form of bank guarantee of the entire project cost. So the depth and the vision of the member has to be widened in terms of, yes, there are far more risk in the traditional redevelopment vis-a-vis the self-redevelopment. And if the I'll say redevelopment committee is spending good amount of time, okay, and their skill sets also, if you compensate them also reasonably, still society is at far better off than what is there in the traditional redevelopment. Today we know, per se, everyone knows there are so many builders in the market, okay, who have entered in the real estate space, and the members have, society have given them the project for the redevelopment, but they don't have any solid experience, and they are stuck in some or the other place, either on the regulatory front or on the entire project execution front. And they have some good amount of cash from their existing business. Maybe they have borrowed from the lenders from that sector, and they have diversified over here, but they are again stuck in this. Just to give you more example, there are people who are from the diamond industry have entered in the real estate space. They have borrowed the money also from the lenders. They have diverted the money over here, and they are all stuck. And finally, the members of that society are nowhere to go. Yeah, that's it from my end. Yeah, any further questions? Happy to take.
Yeah, thank you, Mitesh. That was great. In fact, got to know a lot more on the self-development rather than just redevelopment.
So this was the, I mentioned in my presentation that Blue to Housing Society, Rera won't hear the redevelopment disputes. So this article is talking about the existing members, and this was dated of 17th January 2018 by Times of India.
Mitesh, this is a wonderful initiative by you as a series in the Vivek Patra. Any further development, even if it comes tomorrow, please share it immediately.
Sure, sure.
This is a good way of taking a scan of the even the newspaper reports, and we know you do a lot of due diligence by talking to the institutions themselves. I believe you talked to them even yesterday and day before. But
Yeah,
any updates, development, whether it is
So,
governance, risk or compliance, or whether it is on redevelopment, self-development, Rera, since the series has been initiated, just ensure it comes. You can prepare a slide, additional slide for the Vivek Patra or any number of slides. Ultimately, you have to cross the target of 1,000 slides, possibly by the time the month gets over. And if students can contribute as suggested by Sandeep last evening, and also to the lead presenter today, it can become over 8 lakh slides. It's a process. Process has been initiated, right? So it's a process ultimately. So each person can contribute, and only the vetting has to be done about if the slides are truthful, right, Sandeep?
Yeah, that's right. On this subject, in fact, on self-development, I just wanted to highlight one particular thing, one particular aspect, and that is the risk to the members. When a builder comes in, there is a certain amount of guarantee, a bank guarantee, which is taken by the society from the builder. So suppose the total project cost is something like 18 to 19 crores. They would actually go and take a bank guarantee of 20 crores. So that is the safety. And in case the builder doesn't go ahead and complete the project, the members and the society can very well actually go and get the guarantee paid up. So that's one way of ensuring that there is no default in terms of the builders themselves.
But Sandeep ji, in that case, there are no say for the members to go and directly approach the bank, and that fund has already been sanctioned and disbursed also
No,
to the builder. And
no, these are two different things. The loan is something which is different, and the guarantee from the builder, because the PMC appoints a builder, and the PMC definitely goes and gets a guarantee from a bank guarantee. It is completely different. The bank guarantee from the builder's bank. It's not this bank. The bank guarantee from the builder's bank to the society, saying I'll honor the project and complete the project. So
but
in case he defaults,
that usually comes, I have mentioned, is one of the deciding factor for comparison, that usually it is 10% of the project cost which builder provides. Beyond that, they will not agree to provide, and that will be part of your DA.
No, I don't think that's such a small amount, is it?
Yeah. I had a couple of experiences, I know.
Okay.
Yeah.
Because at least in two occasions where I've come across, we particularly try to ensure that he gives at least something where it covers the cost of the project, because the cost of the project is much lesser. The value of the project on sale might be much, much larger, but the cost of the project is much less. So at least it covers the cost of the project.
True. So if they are giving it,
But I have come across one case where the bank guarantee was about 10% and the project got delayed. Meanwhile, the bank guarantee expired and he has not renewed.
Yeah, but in this case, I think what Mitesh is saying, that the overall project should be completed in 3 years' time. So I don't think and Rera now whole.
So that can be negotiated if it is a big society. it can be looked upon, because this
Yeah, and
disbursements happens once all the necessary permission comes in. And then you can further say that approval, the 3 years has to be counted from the date of members vacating the society, because you have to give some 30 days or 60 days notice to the members also that you need to vacate now.
and Rera also has come in, so there is some protection to the members as well.
No, so the existing members are not getting protected under Rera. So if
Oh,
you,
is it?
yeah, that is what the 17th January 2018, if you get a chance to go through, and this was Bombay High Court only had mentioned this.
Acha, this is what you were saying. Okay.
Yes. So existing members nowhere are getting that security or protection.
But then how they are different than the new society project, new projects, builder projects? Say the builder is coming up with a new project, and
So,
there the Rera protection is
yeah,
there.
so there is a definition of member. Which member we are talking? Is it an existing member or a new member?
No, I
If you are
understand.
booking, if you are booking a new flat, the RERA itself says that this is for the members who are booking a new flat. So if existing members say 500 square feet flat, he is getting 20% more, 600, and he buys another 50 square feet, then he becomes a member qualifying under RERA, and he can take the builder to the court. But if he's not taking any additional area, then he doesn't have any remedy.
But in that case, nowadays, each number of redevelopment cases I have seen that the builder offers them 20%, 30% more area.
Yeah. So that is our
that
part. If you do the feasibility study through PMC, even in the self redevelopment, you will get same treatment. You will get rent also for the period you are staying out. And that is part of all the cost, and that bank also will give you. You will be getting corpus also. You will be getting additional area also. So all are at par.
Yeah, on comparison, self-development is always better. But what I'm saying about RERA doesn't protect old member. That is what I was wondering.
Yeah. That's a fact.
So they should
once,
definitely.
Once they get more area, means they can be considered as a new member.
Yeah, if you buy more area, but then every member doesn't go for that. They may not require.
But that's the point, no, that how the member in a redevelopment and member who is coming in a fresh project are different. In fact, the redevelopment member is a more vulnerable person because he is moving out of his house and having more risk.
Yeah, each member should buy 50 square feet, only 50 square feet. Then the RERA will come in the picture. Extra, pay, agree for that extra 50 square feet. Then it will come in the RERA. Then the RERA will be applicable.
Yeah, that is true. As per the present provisions, that is feasible. But what I'm saying is, even if somebody doesn't buy that 50 square feet also, why he should be considered as a second citizen? Because he is having more risk actually.
Because society is also one of the developer. You see, and society means members. Members are also a part of the developer. That is why the court has taken the stand. You are also a owner of the society.
But that, as Mitesh said, most of the time the redevelopment in a society happens through the builder's influence rather than members agreeing.
That is right, but legally on paper, members are the owners and one of the part of the developer. So that's why the court is taking the stand. But if you what Mitesh has rightly stated, if you have taken some area extra, even 50 square feet, why 25 square feet you take extra, and there afterwards you can take under the RERA, you can take against the developer contractor for that purpose.
That's a good idea.
So Mitesh, what you are saying is, in terms of the FSI, there might be an additional entitlement to the present members. So what you are saying is each member should actually take slightly more than the entitlement. So over and above the FSI space.
Yeah, so they get qualified under the RERA.
To qualify for RERA.
Okay. But yeah.
Mitesh,
listen, just hear me out. They will qualify under the RERA if you still read they will be qualified as if a new member. So they can sue the builder in terms of why you have not finished the project in time,
Yeah.
give me the compensation for that. But they cannot ask him, you have not paid me my corpus, give me that. You have not given me the rent, give me that. Because that still continue as a part of his existing legal scheme.
Yeah, that's the agreement.
Yes, sorry.
This project consultant normally takes, like architects takes 2 to 3% of the cost of construction. Project management consultant takes how much percentage?
So it's all on negotiation. The best thing is you invite 2 or 3 consultants and you evaluate.
No, but that's okay.
If I say 5%, see there are different schemes which runs. There is a PMC I know, he will say that he will take 5% of the fees, but then he will ask you that you share me the profits also. And then profits also will have the breakup. That for fixed profit, he will have 1%, and beyond that, he will have 2%. So society also, with a commercial wisdom, acts smart, and he will ensure that PMC applies his full power to sell all the flats, because society is interested to repay the loan ASAP. So this is all commercial negotiation, how you want to tweak it.
Is it based on the cost of land plus construction, or only on the cost of construction? This fees is based on the...
Ideally, it is based on cost of construction, but then if you want to negotiate smartly and put it on sale part as well, you can do it that way. Because they also have the directories of HNIs as well with them.
So basically, it will be restricted to cost of construction, because cost of land is the main thing here. In Mumbai or in Andheri, cost of land is the main thing. Cost of construction may be around 3,000.
See, cost of construction, it varies, I will say, from 1,800 rupees per square feet to 3,000 rupees per square feet. And in 3,000, you will get even the rods which are anti-rust, okay, which no one will give you.
Right.
It is only for the flyovers.
So 3,000, what I am trying to say, maximum take cost of construction will be 3,000 rupees. But cost of land is the main thing. So
see, land is nowhere going. Where he is going to construct the land, or he is owning the land, it belongs to society only.
No, what I mean is, project management consultant cannot ask, okay, this is my percentage base. He will ask for a cost of construction on the basis of cost of...
Correct,
and that, architecture will be on him, architect part.
No, so there, ideally you should have a different architects, different RCC consultants. So there is a maker-checker concept. We are paying to the PMC for the role of negotiation and checker. So if tomorrow architects fail in the duty, it is the PMC's responsibility.
Okay.
We are laymen.
You are not a layman. You are a aware person of all the regulation. With the kind of knowledge you are sharing,
in technical, how it should be, in technical terms, how whether it is right or wrong, that we don't have the skill set.
Right or wrong is Viveka, and you have Viveka, the type of presentation you have shared. In fact, your this particular summit, the link, live link should be shared with every member of the cooperative society. So nobody dares to say they are laymen, right?
Yeah.
If possible, try to do it. Every member of cooperative society, everywhere, whether it is Mumbai suburbs, abroad, MMRA, MRDA, other states, other states also, maybe other countries also, they know Rera is one of the best regulations. So they need awareness, and they need to know what is the fine print, and fine print is being shared in the Vivek Patra. I think that reach out initiative needs to be done. There are lots of people who have said that they will work for reach outs, including you. So just make sure this link today goes to every person in every owning or renting or staying in any home, whether in Maharashtra or any state.
When central government formed the Rera, it was very solid act. But state government has lobbied, the builders have lobbied so much with the state governments and have made it almost like a teethless.
Lobbies will keep on there. Why don't you
Yeah,
also lobby?
So I am
Time for
saying,
lobbying will come
I mean
actually.
to say from the interest of the members' perspective.
That is okay. Everybody has a right to lobby in a democracy.
Yeah.
Every
Correct.
citizen has a right to vote. But ultimately, it is people are, once they become aware of the law, implementation is a key issue. And the
Correct.
Rera site has a lot of orders where one can go to appeal also, as we had seen in the earlier presentation. And those orders also shared, and it's very becoming a transparent regime where other states are trying to emulate the state of Maharashtra. And let us say the state of Maharashtra has done a very good job. The efforts for last so many decades have resulted in Rera, which came from the central government and other states followed. And this is among the finest legislation and implementation. The website of Rera is among the finest one. It works and it is an interactive. And what you have done is quite a fine print analysis on the practical issues and live examples. Let it reach every society member, whether a owner or a tenant, or even people gathering for 5 people and staying in a room. Lots of people who come from other states, they tend to do it and go back, right? So this is a very, very excellent the way it has been done. Latest developments have been shared, including the RBI policy, which many of the banks and NBFCs are trying to implement, including cooperative banks, and also planning to give subsidy. Ultimately, the affordable housing and the construction sector will pick off. Infrastructure sector will pick off. Infrastructure sector gives the highest employment. It's the highest employment generator, right? So many people get employment, and this is really the base of all this. It can really multiply and become a good challenge to all those top people who are lobbying and coming out with IPOs and raising huge amounts. And of course, they have got international projects, but ultimately they may also become partners and approach societies and with high quality proposals, high quality construction, right? So they should be inspired at the presentation. I hope the board of the company which has done IPO, which will be listed last week, many of them are known to me, including the chairman. And in fact, they have committed to us, they'll be seeing this presentation of yours themselves. The board of the company, some of the independent directors, they have committed, they'll be seeing this presentation personally. So that is the effort of all your work you have done, including late night and updating the presentation and the slides.
I think Mr. Jatin Parekh has raised his hand. If he has any question.
Yeah, my question was, hi.
You need to put on your video and introduce yourself, your name and company name. That is the essential criteria for speaking, so people can understand the connect. And your context.
Yeah, hi. Can you hear me now?
Yeah, we can hear you.
Yeah. Mitesh, it was
is your video on? Is your video on?
Yes, video is on. Video is on.
Jatin,
Okay.
Can you introduce a little about yourself
name
and the
company name?
Name and company.
Yeah, currently I'm working as a CFO in MAD Studios Private Limited. It's a digital media company.
Which company?
And
CFO in which company?
It's a media company. MAD Studios.
Can you name
Private
the media company? Media people are well known. Name the media company.
MAD Studios Private Limited.
Sorry?
MAD, MAD Studios Private Limited.
Oh, wonderful. I think it's a sensible media company. Go ahead.
Okay, fine. So my question was when it was regarding the, I think someone was speaking about the bank guarantee part. I wanted to say that the bank guarantee is only about 10%. That's why I raised my hand. That it is not towards the 100% of the project cost.
Yeah. They won't give, because what happens in this bank guarantee, it is not like a non-fund based limit.
Yes,
they have
it
to
is completely
the entire amount
yes
to the banks. Then only bank gives that money. So then money gets blocked. There is an interest cost which is factored.
Because I stay in science, so my building is also under the question of redevelopment for the last 10-15 years, and there are many projects undergoing in science. So all of them are getting only 10% bank guarantee.
Yeah.
So I don't know which rule or which law, but it is basically custom.
Mitesh, 10% is the cost of construction or total cost, total sale price?
The budgeted cost.
Budget
The cost that has been identified at the time of negotiation, 10% of that amount is given as bank guarantee.
But 10% is the
they will not share you what is the value they are going to earn overall. So they will say this is the project cost and this is 100 crore is the project cost and 10 CR is my BG. They may make 150, 180, whatever, 110.
That means they will take into account cost of TDR or cost of whatever is that, include that thing, and cost of,
that will be there.
That will be there.
For the purpose of bank guarantee, the cost will be always lower. But for the purpose of when you are going to buy it or additional 50 square feet or so, the cost is going to increase. It's a different ball game altogether. The negotiation is done by different people for the same company itself.
Fine then.
Jatin, you are welcome to tell all your colleagues to share a presentation on how media can be sensible and truthful. That will be really wonderful, including you. At any time.
Fine, not an issue. So currently, what our business line is, media is a very generic term. Like our CA is a very generic term. Media is a very generic term. So the media is it can be bifurcated into, there are basically 100 streams of media. So currently, what I am doing is that I am a CFO of a company which is basically into production of advertisement and rental of media equipment like lights and the grip material or the vanity van. The media that is known to the common people is like TV serials or movies and the channels. It is not the only part of the media.
There are lots of well-known media people who have got experience in rental of equipment worth thousands of crores as a part of ThinkTank. So if you can connect on LinkedIn and share your coordinates, so I think you will be a big gainer. And they are a part of people who have invested or experience with thousands of crores, not only in India, but also in London and USA. Some of them are participants in some of the big media companies.
Surely.
Invite all your LinkedIn and Facebook friends also on the ThinkTank Conclave site. And if your numbers are shared, they can connect with you immediately, I think.
Surely. I'll get it done. Let me understand what exactly is required for the presentation.
It is very clear, ethics, integrity, and truthful. The three basic criteria is required. That's all.
Fine. Not an issue. I'll get it done.
Wonderful. Thanks for raising your hand and sharing. Everybody is welcome. The context is clear.
Sure.
Everyone is welcome.
Yes. Fine. Thank you.
Presentations, is it available on YouTube, these presentations?
You will people will get whatever they request in due course of time. Connect on LinkedIn and Facebook. All updates are shared on LinkedIn and Facebook. Invite all your LinkedIn and Facebook contacts so they can benefit from it, and they can also share lead presentations on the basic context of ethics, integrity, and be truthful.
Fine, everyone. So, shall we conclude?
Well done. Great effort. Great contribution. Great Vivek Patra. It will keep on expanding as suggested by all the members.
Yeah, thank you. We can call it for a day.
Yeah, Prakash bhai, wonderful thing. You have done great work as a co-founder. Keep the flag flying high. Make sure every customer of yours subscribes to all the channels.
Yeah, definitely.
Wonderful. Thanks to everybody.
Yeah.
Thanks.
Sure. Any idea on macro tech? Some news has come today that they have got some license for a big project from New Bombay Corporation. So maybe that will give some benefit to the price.
Can you put your video on?
Yeah. So I'm saying Loda, just morning I got some news that they have got some approval for making 1200 acre some residential project or some project which has come. So maybe
it has come in the media. Yeah, continue.
So ET I have read it.
Yes.
So I think they have to yet to come officially on that. So if that is true, that will give some boost to the pricing. If you subscribe around 3 times in an institutional way and 0.4% in retail. So let's see, I think issue is sailed. So I think now retail, whatever shortfall will be filled by institution. Let's see how they are pricing discovery is going to happen in the stock exchange. So what has happened in the barbecue nation, if something comes like that, let's see, because I think 50 crore put by Rakesh Junjunwala, that was a news. So,
Good insight shared by you. With your permission, can I share something?
Yeah, please.
You mentioned about media. We just discussed about media. Was the media truthful or is it part of business development strategy for listing? And it is not a question of retail being made up by institutions. Retail investors have been very, very smart. They know what is happening in the company and in the market. I think retail investors in this IPO has been the smartest. And talking about institutional investors, the anchor book has been shared. Some of the best anchors who are approached, they have rejected participation because of uncertainties and risks of the market and in the sector and about the company's brand. Why the name was changed, why the size of the IPO was reduced. So those concerns are there. And you talked about a project in where Navi Mumbai, right?
Yeah, I think it's near Taloja. What news has read in the morning?
Right. So that is it. One needs to need a city survey number. And what is also Navi Mumbai? What is the element of truth in it? Down Navi Mumbai, which sector?
I think Taloja. No. I think it should be a Taloja.
Yeah. So it is it Mumbai? It is not Mumbai.
No, it's
neither. It is Navi Mumbai. So there is a question of how it is being. We need to see what is the release of today's stock exchange on that.
Right. So even I am
so
waiting.
Whether they need to share with stock exchange, and also we discussed in the earlier part, there was a regulator committee where KK Mistry was heading it in November. Whatever they interact with investors, the transcripts has to be shared with all the investors, and level playing field is there. You named one person who thinks he is a Warren Buffett of India, and somehow directly or indirectly, maybe without his permission, his name is used to rig up the stocks, which he may not like. No, it is very good you are sharing. That happened in one of the banks also, where there was a big issue of AT bonds, right? So he said he's picking up a stake openly. It came in the market and disclosure came. Ultimately, what happened to the investor? Shares were taken at a throwaway price, and the shares were locked in for 3 years. And those banks which took the shares at 10 rupees, they sold the shares at even 30 rupees and 60 rupees because of the unfair advantage they had over the other investors who were locked in. And the name of this person was really well branded in the media, whether it was manipulation or whether it was intentional or unintentional, that truth will take the time to come out. So we should be beware when such names of such people are known or communicated or miscommunicated. So we just hope the risk factors are there. The RHP, as was discussed, ThinkTank original is known for SWOT and discussing RHPs at detail. So go and read the RHP before you invest in the listing thing. And certainly it will not be like Burger King. Certainly not. People may lose their money because some people feel it's overpricing, and some people have been taking it. Most of them are some short-term players, and many have not taken it. So that models need to be understood, risk factors, and ultimately quality and customer experience. And elucidation would be showed. You all know what happened in ILFS transportation, right? You had interaction with the management, and today what is the fate of such a company where investors need to keep a continuous vigil and watch, as Dushyant has said today and several times earlier also. So it is good that the capital market is now quite healthy and companies are getting money. And so bankers are also happy because the debt equity ratios improve. And if the company has got funds, it is good. We just need to ensure that a board which has got eminent professionals, including the chairman also, who is really well known, They do deep dive. They go through today's presentation, including SWOT, including what happened about self-development, redevelopment, where they can participate. And then I'm sure the board members can benefit much more. Many of the board members, quite a few of the board members of this company you mentioned, are connected with me, have interacted with me over the last few days. And what I'm talking about is I have not shared any of the interaction about that. I have just addressed your question based on what you said. It came in a well-known pink paper today.
Yeah. The only thing why I was telling, because it says it can generate a 1 lakh crore revenue, and with 12 crore square feet development, it's a 1500 acre plot near New Bombay. So
This happened in another company.
Is very high.
This happened in many other companies which got delisted, and their cases are an IBC.
Right.
Similar thing, how those FS are worked out. Point is, have they registered on Rera? Ask them to give you the registration number of Rera for this project. This project which you mentioned is so far not registered on Rera. So such square feet numbers are misleading. It's a part of development to ensure higher listing, and people know about grey market also.
Right.
What people, so that traps can be investor. Any project, look at the Rera site and ask them the Rera number. That is it.
Right.
And very clearly look at the RHP, and that's customer experience, and on the risk factors, go through it in detail. But I'm really delighted the company has got the money, but the money should be made used very prudently, and money should not be made to divert from one project to another. As Mitesh mentioned, there are too many projects being launched. They are not been completed, and once you get advances from customers or money from the bank, and the money gets diverted to another project to another, and there is a concentration risk which was shared in the SWOT today. That needs to be understood. So be truthful and go do deep dives as usual. And Prakash, you had raised really wonderful insights. Hats off to you. Hats off to you. You are raising all the practical issues.
I just
ensure it reaches every investor who has subscribed, whether a retail investor or the institutional investor or the anchor, before he buys further or he exits at a price and other investors get trapped. And hopefully value creation will there. And the numbers you talked about of revenue, there is very clear. India's numbers are less than 10,000 crores. And the pre-market market cap is around 20,000 crores, and India's numbers are less than, and in the current year, as per the RHP for December numbers, there is a huge revenue fall, and it is just 5,000 and less than 6,000 crores actual revenue as per India. Look at that, and the company has made losses. Is the market cap of 21,000 crores justified? Are the retail investors long? And what about at 0.4 times also? What will be their fate after listing? And everybody knows what happens in listing, what type of games go on. You know, there are also NBFCs who do funding, and then they want what happens post-listing. The post-listing study of last 10 years show over 50% of IPOs, even today at the current frenzy prices, are below the IPO price. But the company has got a few good respected board members.
Yeah.
Few, not all.
Yeah. Chairman
not
is
all. And some of them, they are not aware of what's happening on the ground, particularly in the NCP project and in their team, which is called loyalty team. If the facts what are happening gets known, I'm sure the board would like to take corrective action and improve the image of the company further. So there is actual value creation. And the revenue number as per India's is very, very important. Look at the India's number. Share it with everybody. Don't go by distorted numbers which come in selected media without sharing on the regulator side or the exchanges side, whether it is NSE or BSE or is it MSCI. Very, very clearly go into that. Ask them the India's number. And I will tell you clearly, our interaction with the board and some of the institutional investors interaction on the board, this question of India's revenue number was clearly asked, and one of the key persons, the key management personnel of the company interacting, he responded to that India's number. He also explained the discrepancy between the revenue number and the India's number. That is a good sign of coming forward and sharing and discrepancy. But the India's reported number of less than 6,000 crores for 2021 and the loss has not come out in the media very, very well. If it has come out, please highlight that. Before any institutional investor or so-called punter who thinks they are Warren Buffett, whether they invest. They had access to information in another company called Indiabulls Real Estate also, where the information for the models, people are wondering, and the stock has been performing maybe because of the India growth story, maybe because of the merger with Prestige, which is mentioned in the RSP. One is a listed one and there is an unlisted one. So when the merged number comes out, then one can do proper comparison, whether it is with the Prestige Group, a listed one, unlisted one, whether it is Godrej, whether it is DLF, or whether it is Oberoi, or whether it is, there are many more REITs also. You need to look at their valuation. Whether you compare the market cap of listed companies in real estate or in REITs, you need to compare that and the yield and total return. I think there's really, we have discussed REITs before at length,
just
right?
one point of difference. As we have seen in Murtuza Bhai's slide, what I was thinking from a predictive...
He is not here now. Let us not discuss that PPT now.
Okay, okay. No, I'm saying it is a predictive analysis.
That's okay. Let's talk on self-development and this issue. Yes.
Just allow me to speak one
minute. Sure. Yeah.
See, one thing, what you are speaking is an actual thing. It's a real thing in numbers. Whereas what I am thinking in terms of business, in terms of real estate scenario next 2-3 years, and the development in the Kalyan Dombivli micro market and development of New Bombay. So I am talking more of a business point of view. I having gone to Palava 3 times because my friend has bought a flat. So I visited over there and seen the development. Good. So basically going there and how much the retail space and everything they have developed. And now Mahindra Lifespace CEO has come 1 week before. I have seen his interview. Yes, they have taken another 10.5 acre land along with this another 8.5 acre land, and they say we have increased the price by 10%. So what has happened? Even if Palava is not doing well, the adjacent area, the side areas, if increase the price, they will get the benefit of that. The only problem is the supply is very high because it's a huge project. So what I am able to see is that if the real estate price, everybody increasing the price, they will get the benefit.
You have made very pertinent points.
I am talking of a business point of view. I'm not going more by the numbers, but seeing the development and real estate is going to be in a at least 2-3 years. Everybody is saying real estate will do well. So if you see Godrej property now today, they are the 3rd largest real estate player after DLF and Godrej, and just way above the Oberoi in terms of the issue price. If they get listed, they are the 3rd largest real estate developer of India. And see, whatever bad time gone, everybody has suffered. Now, with money they have, the debt equity ratio, as you correctly said, it will improve. We may, my gut feeling is that within 2 years, they will have some FHP or some private placement of the shares after some price goes up a little bit, and they can still improve it. Plus, they are trying to sell a lot, but as that one project, if price goes up, they will make good money. That is, and also one more thing, apart from residential space, they are coming out of the commercial and 800 acre or 1200 acre logistic park, which is coming near Palava. So if they have a logistic park and airport is coming, see future, I am not going by whatever numbers, you are going history, I'm going future. And business.
We are looking at the facts as they are, and not the rosy future which is mispainted. All this thing about logistic park and all, is it truthful or is it humbug? You talked about your visit to Palava and the project is not doing well. There are reasons for that.
No, but if you see, I tell you one thing, just one thing. There are people who are coming. There is a retail space which has come. There are, if you see, the parking was not available 1 year ago, fully available, maybe 25% covered. Today, parking is not available. The people have started coming, maybe on a rent. See, Airoli, the nearby area is Airoli. Airoli, a lot of offices are coming. So the people who are staying there, I met 1 or 2 guys in their clubhouse, and he says, I'm staying in Airoli. So from he's staying on a rent in Palava. So what is happening? Maybe Palava will not develop, but the other areas, the office area and commercial area will come over that area. So the value will increase over there. So now today I personally seen the parking was hardly available in that particular complex where my friend has bought it. Whereas last year it was 25% empty or full, 70% empty. So people are coming maybe for a rent or a ownership. It's a different story. But then because of the other area, Airoli and New Bombay, Gansoli, then Geo Park, then other areas will develop. So that will give boost to this project. Plus builder like Mahindra, then other area, builders are coming in that area. So that will develop that micro market. And property is a location which that matter. And if New Bombay, see, airport will come not today, maybe after 2 years, 3 years, or 5 years. And plus metros is coming. So metro is getting connected maybe next 3-5 years, even the metro will be connected. So that I am talking of future, you are talking about history. Jo hua, aage kya karenge? Maybe for 3 years, they may not make money, but after 3 years, they are going to make very good money. That's my gut feeling.
You have raised some points about the failure of the Pallava project very clearly. And also, when you look at the well-known website, the resale prices are around 20 to 30% lower than the project prices at which the company is selling. So look at the resale. Actually, the real resale market should get absorbed. It is very important today. 20%, 30%, 35%. In spite of all those rosy brochures and golf courses and all that, how many people are using that? That deep dive really shows that. And as you mentioned about development and Mahindra Lifespace, there are lots of top Mahindra Lifespace is a very highly respected builder. It's a part of the India growth story. Development takes place and employment generation takes place by development and infrastructure because of the government policies on FSIs and incentives. So this company being only one of the companies, a small company, they will certainly benefit because of the policies of the government at the center and also of the state, which has supplemented their views to strengthen the India growth story. There are many builders, many listed in space, many high quality builders in unlisted space also, who do one building at a time and who deliver, where the resale prices are much higher than the front prices. That is very, very important. So this is the current scenario and future scenario. With the sharing of this presentation, things will become more truthful and miscommunication would not happen in media just to have some listing gains for some people or some punters. That is very clear. Next few days, what comes in the media, please look at whether it is truthful or not. Go to the Rera site, check it up. Don't go by rosy projections. They all come at the listing time. They'll all just vanish away. Then critical reviews will come and then people will say, Maine bola tha, why did you put so much money? The issue was overpriced. That can happen. Banker is happy because earlier there were possibilities of high defaults. We all know how Piramal Enterprises bailed out. They had over 1,000 crores to this group. And they were told by their institutional investors, why you are giving so much exposure to one group? And Mr. Ajay Piramal himself shared, we will certainly reduce the exposure. Then he spoke to some members of the board and their exposure to this group was reduced. Only after that, the prices of Piramal Enterprises shot up. Everybody remembers that it had gone from 1,200 to 600 odd because of this issue of high concentration of exposure to this group. When they reduced, then the stock price has tripled by a multiple of 2 in a short period, and they have been known as one of the largest financiers to distress real estate projects.
Right.
Of course, they get a high return, a high NIM margin. So we are talking about the present, and we are also talking about future. For all future disclaimers, very, very clearly apply. We just have access to information which is in the RHP and which is on the Rera site.
Right. I think last week we have discussed very little bit in detail over Kalyan Jewelers. So this week we have discussed macro tech. So I think every week there are a lot of issues are coming and we are discussing that issues.
You are raising very pertinent point. Keep raising such issues, whether it is this jeweler or that jeweler or this real estate project or that real estate project, based on a clear deep dive. And what comes in media also, just show the way you showed now. Take a scan and share it. We can discuss that also from whether it is truthful or not.
Right.
And whether it is corroborated by a release to the stock exchange on the site. There is a nacindia.com, there is BSE India, correct?
I will
and
put
also
it on
MSE. And there are regulator sites also. Let it be there. Let us corroborate that. Look at the RHP and make sure all the KMPs of companies you mentioned, are welcome to come on the platform anytime. They said we will come after listing because of limited information in RHP. In fact, they are welcome to discuss information in RHP as you are doing selectively with so-called punters, and then you say somebody has given 50 crores. Is it based on RHP? How many pages of RHP he has read? Or he has got some access to information which you don't have. Do you have the same access to information as the person you mentioned?
No.
And why not? Is it fair?
No.
Should not be you be given the same treatment as this information? You can raise much more money than 50 crores.
So that's why
you have the potential. You are a foreign banker. You know a lot of global investors. Not only 50, you can raise 500 crores.
Right.
If you have the same kind of information, if you are able to do proper due diligence.
That's why I was sharing the my experience, which you get it after, just before 2 months.
Very good.
When I visited there.
Very good. Visit again after a listing. Hopefully, the buildings may be having a second dose of paint, possibly. Because listing a time, they want good prices, right?
There's a Corona price, so maybe after 1 month I will go. I think, as you correctly said, it is a better to buy in a secondary market now, if it is available 20-30% discount. So I know that my friend has bought this project, and with home loan interest, it is costing him around 71 lakh. Whereas if you go for selling, it is selling at 47 lakh.
Exactly. This is a deep dive.
He bought it
this
for
is
around.
A deep dive you are done.
So he bought it for around 60 lakh plus 12-13 lakh rupees is a home loan interest. So around 71 lakh rupees is a costing, and which is going to pay if I consider the all 20-year home loan interest. And that 60 lakh or 61 lakh project he bought 5 years ago or maybe 3 years ago, he's selling at 647 lakh. So as an investor, or you or me, go and buy at 47. It is like buying a 100 rupees currency note in 70 rupees. That's it.
If at all you want to buy in this project, there are many better projects also.
Yeah.
Yes, that's it. That's it. So we close with today a wonderful deep dive analysis by co-founder of ThinkTank. Wonderful insights. Make out that it reaches to every global investor, and who gets purchases a home, get a very good experience in the future. And the builders commit and they deliver on the promises. Hopefully, they give a warranty of 10 years. Hopefully that day will come. They give a warranty of 10 years, whether it is an NCP project, which has a very bad image. And also the loyalty, so-called loyalty team has spoiled the name of the brand or the company. The customer experience should be good. Hopefully there is a warranty which all the maybe other builders can also come in and testify and have a good experience. I'm sure the customer is willing to pay for the warranty from a credible party, right?
Which project you said, NCP?
The so-called Vadala project.
Okay.
There is also a lack of truth in it when it was branded suddenly with political support.
Yeah.
What is new? What is NCP? New cuff for it.
New cuff for it.
Does it have even 1% of cuff for it in it? No. The answer is no.
Only 2 words is there.
Sorry?
So people who thought it will be a cuff for it, then it is their call.
Gullible investors. Mis-selling.
See, area is not bad. Good here over there.
It's not bad. It's a part of Mumbai. It needs to be developed.
Right.
And incidentally, the truck terminal was there, and there was some gas coming across from a chamber which was earlier known as a gas chamber. So people are avoiding that thing. In fact, they were also telling, why don't you go from this route or this route, so you don't see that gas coming out, or you don't see the truck terminals. That is the ground reality. If you come by, do a deep dive, or all those the pictures and photos are available on the internet.
That's why when you buy a property, you have to go there.
We have a couple of independent directors on the board who have been recently appointed after those controversies. So they will hopefully do a job better than expected from other independent directors.
Right.
Hats off to you.
Thank you, sir. Small contribution, very small, tiny.
But relevant, very relevant.
Yeah.
Very pertinent. Mitesh, what do you say?
I think many people have left.
That's okay. It's a summit and it has lasted for more than 4 hours non-stop. And it is all food for the thought.
Yeah. Acha, can we get the Murtuza ji ka PPT?
You can connect offline separately. He's on the way from Thana to Kalyan. Maybe he's on the way. He'll see some of the projects and developments you mentioned. and also about a jewelry which has a similar name. He should have reached Kalyan by now.
Can you put it on the group?
That's okay. You can connect with him offline, and hats off to you. Thank you, everybody.
Thank you.
Thanks, everybody.
Namaskar. Thank you. Okay.